See, I can get
कल का लिंक क्लिक करते हैं।
कल का लिंक हो जाएगा क्लिक करने से। नहीं है, yesterday's link नहीं है, not working. हाँ आया।
स्टार्ट किया कैसे?
स्टार्ट नहीं हुआ अभी,
हुआ है
नहीं आ रहा है।
सर, क्लोज करके ओपन करें। स्टार्ट नहीं हुआ है। ग्रीन करना होगा।
हाँ फाइन।
ठीक है सर। ओके
Alright, recording. Alright, so let's continue where we left yesterday and finish up the concept of cost. So yesterday we covered the average fixed cost, right? So we've seen that average fixed cost is what? Is the fixed cost per unit of output. Alright. Now average variable cost. When we look at average variable cost, you'll find that any particular cost, if it increases at an increasing diminishing rate, its average will fall. And then when it begins to increase at an increasing rate, its average will begin to rise. So initially the total variable cost increases at a diminishing rate. Why? Due to better utilization of fixed input and also specialization of labor. So when it increases at a diminishing rate, you'll find that the average variable cost will fall. And when it increases at an increasing rate, the average variable cost from that particular point onwards, it will begin to rise, and you'll see that you'll get an A U-shaped average variable cost. All right. So let's write down about average variable cost. Here, when output is nothing, variable cost is 0, so average variable 0. Then 200 by 1, you got 200. 300 by 2, you got 150. You see, TVC is increasing but at a diminishing rate, and that's the reason the average variable cost is falling. Then 360 by 3, that will be 120. Then 400 by 4, that will be 100. So up till this point, you see the total variable cost increases at a diminishing rate, and so average variable cost will be falling. But from this point onwards, the total variable cost begins to increase at an increasing rate. And so if I find out here 600 by 5, that will be 120. You see average variable cost has begun to rise. 1000 by 6 is 167. 2000 by 7, 285, and 4000 by 5, that will be 500. All right. So you see AVC falls down, reaches its lowest point, and then begins to rise. So the AVC curve will be a U-shaped curve. U-shaped curve. So there are many curves which will be U-shaped. So if we write average cost here and output in terms of quantity, so initially with the increase in the level of output, the AVC will begin to fall, will reach its lowest point, and then it will begin to rise. This is your AVC. Now it is U-shaped. Now many a time they'll ask you that why it is U-shaped. So understand it is U-shaped due to law of variable proportion. Now why due to law of variable proportion? We have seen the total product curve yesterday in the law of variable proportion. So what happens initially, you see that if this is your production and this is the variable input that you're adding, variable input. So what happens? You see initially the TP increases sharply, then it increases at a diminishing rate, reaches its maximum point, and then it will begin to fall down. So if I take this particular point from here to here, if I take this particular point from here to here, you see this is the variable input and this is the total output that we have got. This is the output. So can I say that a relatively smaller increase in variable input is leading to more increase in output? And to buy this variable input, I have to incur what? Variable cost. So can I say that since I need to increase my input by 20%, output is increasing by 50-60%. So my input cost will be on lower side or higher side? It will be on the lower side. So can I say in that case the total variable cost will increase but at a diminishing rate? But later on, what happens if I take this point here from, let me use another color here. If I take this point, all right, and this is your variable input that I'm adding, and what is the corresponding increase in output? What is the corresponding increase? Can I say that I'm increasing variable input, let's say by 30 or 40%, but my output is increasing by only 20%? It means output is increasing in a relatively lesser manner compared to increase in the variable input. And to purchase this variable input, what cost I have to incur? I have to incur variable cost. So it means, do I need to incur more variable cost or less variable cost? More variable cost. It means variable cost will increase at an increasing rate, and when variable cost increases at an increasing rate, then average variable cost will begin to rise. And that's why we say that if any average curve is U-shaped in the short run, it is due to law of variable proportion. All right, clear? Now remember, we have seen that total cost and total fixed cost, they both are parallel lines, correct? They are parallel to one another. Why? Because the difference between them is due to total fixed cost, and total fixed cost never changes. But in case of average total cost, you can get average total cost in two ways. First, you can add average fixed cost plus average variable cost, or what you can do, or you can divide the average total cost, you can divide the total cost by level of output. If you're not making any mistake, you should get the same value. So what happens here, that as we increase the level of output, average variable cost in the average fixed cost falls initially sharply, and average variable cost also falls. Don't you think? When average total cost in aggregate of average variable cost and average fixed cost, then average total cost will also fall sharply, correct? But after reaching a certain point, average fixed cost will become very, very small. All right. So average fixed cost will continue to fall, but total variable cost increases sharply. So as a result, average variable cost will begin to rise. So average fixed cost still falling, but it has a very small value, relatively small value. But average variable cost is rising. It has a relatively large value. So what will happen to average total cost? Average total cost will begin to rise. Think it in another manner. Initially, total cost increases at a diminishing rate. Why? Because total cost changes due to change in the total variable cost only. So when total cost is increasing at a diminishing rate, then average total cost will also fall. And when total cost increases at an increasing rate, because total variable cost is increasing at an increasing rate, then average total cost will also rise, correct? So if I want to figure it out, it means it will be also U-shaped curve. So let's see our understanding works or not when we calculate average total cost. So here average variable plus average fixed, that will be 1200, then it will be 650, then it will be 354, 453, 453, then there will be, it will be 350, then it will be 320, then it will be 334, then it will be 428, and there will be 625. So you see, average total cost also falls, reaches its lowest point, and then it begins to rise. So can we say that average total cost will also be a U-shaped curve? If I take average cost here, and if I take the quantity of output, so ATC also falls, reaches its lowest point, and then it begins to rise. But understand one thing here. When we compare total cost and total variable cost, they were parallel lines. But average cost and average total cost and average variable cost and average fixed cost, they will not be parallel lines. All right. So I'm sorry, average variable cost and average total cost, they'll be not parallel lines. Why they'll not be parallel lines? Because the gap between the total cost and total variable cost was due to fixed cost, the gap remained constant. But the gap between average variable cost and average total cost is due to average fixed cost. But average fixed cost, does it remain constant? No. So what happens here? We have average total cost ATC, and initially there will be a big gap between average total cost and average variable cost, but this gap will narrow down. Why? Because this gap between ATC and AVC is due to AFC, and AFC continues to fall. So it means the AVC and ATC curve, will come closer to one another. All right, I'm not able to see the chat. All right, so they will come closer to one another, and but they will never touch one another. Why it will not touch one another? Because the difference between them is due to AFC, and we have seen yesterday that AFC can never be 0. So if you go to the schedule here, you'll find that initially what is the difference between ATC and AVC? The difference is 1000. But what is the difference over here? The difference is only 125. So don't you think as we grow for, produce further and further, AFC will continue to fall down only, but AVC will rise. So what will happen then? The gap will even come closer, because this gap is going to fall down. This, because this is the average fixed cost is the gap between ABC and ATC. No, if I produce one more unit of output, don't you think it will come down to lower than 125? Then it will continue to fall. So they will come closer to one another, but they will never touch one another. Clear? All right, so let's continue further. Now you have what is known as marginal cost. So what is marginal cost? Marginal cost is nothing but change in the total cost which happens due to change in the output by 1 unit. So it means if I want to calculate marginal cost, then marginal cost will be change in the total cost by change in the level of output. All right. So if I want to calculate here the marginal cost, let's look at the total cost here. Total cost को देखने का. So here the change is nothing. Then change is what? 200 divided by 1 minus 0, that is 200. Then here is 100. Then here is 60. Then here is 40. Then you have 200. Then you have 400. Then you have 1000. And then you have 2000. You see that marginal cost also falls, and it falls and rises very sharply. Why? Because marginal is always calculated as a difference between two levels of output, wherein average is calculated at one single point. So marginal will always be more volatile than the average. And you see here again, when you compare AVC and MC, you look what happens. They begin from the same point. I'm comparing these two. I'm highlighting the word, the columns in green so that you can compare. I'm comparing AVC and MC. When I'm comparing AV and MC, you see MC and AVC, they begin from the same point. And then I've told you that marginal will fall and rise more sharply. So you see, beginning from the point, marginal suddenly falls from 200 to 100, but average falls to 150. Then marginal falls to 60 and average falls to 120. Then marginal falls to 40 and average falls to 100. And you see what happens. From here, the average variable cost begins to rise. Sorry, from this point 100, that is the lowest point, it begins to rise from 100 to 120. By the time it reaches from its lowest point 100 to 120, what happens to marginal cost? It reaches from 140 to 200. So it means, don't you think that marginal cost will cut the average variable cost from below? From where? From its lowest point. Correct? Now, if I compare the same thing with regard to average total cost and marginal cost, average total cost and marginal cost. So what happens? You see again here, marginal cost already opens way lower than the average total cost. So, but both are falling. You see, it falls from 1200 to 650. It falls from 200 to 100. Then 453. It falls down to 60. Then 453, 50. It falls down to 453 होगा क्या यहाँ पे? No, wrong value we have written here. ATC का क्या value है यहाँ पर? 350 it is. 350. So it falls down to 350. It falls down to 40. Then from 350, it falls down to 320 and it begins to rise. And what happens? You see, this is the lowest point of ATC. By the time from the lowest point it reaches 334, the marginal cost reaches from 200 to 400. So don't you think marginal cost will cut the ATC also from below from its lowest point? Correct? So can I conclude now that the marginal cost curve will cut both ATC and ABC from their respective lowest point? So if, where was the diagram? I'll update that diagram only. Yes. So what will happen here is that the marginal cost will begin from the same point as average variable cost. It will reach its lowest point and then it will begin to rise. it will cut both ATC and ABC from their respective lowest point. But you have to know here that if suppose I erase the ABC curve and then I circle down this line, you see when ATC curve has a falling slope, it means negative slope. When ATC is falling, can I say that marginal cost is lower than the average total cost? Correct? Right or wrong? And when I circle down this point, now ATC has a positive slope. So as ATC is rising, and can we conclude when ATC is rising, then MC will be greater than ATC? Correct? So, for where did I go? All right. Now, if I take the ABC curve, if I erase this and again circle around this one, can I say the same thing for ABC? When ABC is falling, it means it has a negative slope. Then MC is lower than ABC, correct? And when I circle the other part, that is, let's see, if I circle the other part, what is happening? When ATC has a ABC has a positive slope, it is rising, then MC is over the ATC. So can we conclude then from our point that when ATC and ABC are falling, then MC is lower than ATC and ABC, and when ATC and ABC are rising, then MC is over the ATC and ABC, and MC cuts both ATC and ABC curve from their respective minimum point or lowest point. Now what happens in the long run, you'll find that there is no distinction made between variable and fixed, because everything has become variable. So in the long run, you'll have one curve, the MC and AC or ATC curve. Now one more thing that I forgot to mention, that many a time they'll ask you which curve is closely related to the marginal cost. All right, or the change in the marginal cost is due to what? Now the formula says change in total cost by change in output, but the question is why total cost is changing? Don't you think total cost is changing only due to change in the total variable cost? So can I calculate total marginal cost from the total variable cost? If you look at the table, can we do that? Here, if I look at total variable cost here, can we calculate the same value of total variable cost, use a marginal cost using total variable cost? You see 200, that is 100 here, you have 160 here, you have 100, you have 40 here, you have 200 here, and so on and so forth. All right, then why we write total cost? We write because we know that total is summation of marginal, but the change in the total cost is due to total variable cost. So if they give you both options in the examination, that change in the marginal cost is due to what, and total cost and total variable cost both are given, then you will choose total variable cost. Sometimes they will not mention total. If they have mentioned only variable cost, it means they are meaning total. Unless average is given word, the average is used, you will not assume it to be average. But if they have not given that, then no problem, the answer is easy, then you can mark the total cost. All right, now let's come down to our concept here. So what happens here, you see that again the same logic we can apply in the short run. When AC or ATC curve has a negative slope, then MC is less than AC or ATC, and when AC or ATC has a positive slope, then MC is more than AC or ATC, correct? And MC will cut the AC or ATC curve from its minimum point. Now, many a time they ask the question that which curve will affect which curve, or which cost will affect which cost. So remember, it is the marginal cost that will affect the average, but you cannot conclude anything when you're talking about the average. The height example I've told you, know, if suppose the height of the student in the classroom, there are 100 students and I want to find out the average height. The average height is, let's say I've got 5 feet. And if a marginal person, a person which is 6 feet tall, enters the classroom, a new person, and if I had to take him to the average and calculate the average again, the average will increase. So can I conclude when the average person's height, when the marginal person's height was more than the average height, it pulled up the average height of the classroom? And if the marginal person's height would have been 4 feet, then the average would have fallen down. It means wherever the marginal goes, the average will follow. If the marginal cost is increasing, then the average will increase. If the marginal cost is falling, then the average will fall. But we cannot conclude same thing with regard to the average. Clear? Now comes what is known as the LAC curve. What is LAC curve? LAC curve, you can call AC or ATC curve also as LAC curve. Now remember, the most productive efficient point of production is where the average cost is at its lowest. All right, the average cost is at its lowest. So if this is your average cost and this is the quantity of output and this is your LAC curve, which is also known as planning curve or envelope curve. Why do we call it planning curve or envelope curve? Because it envelopes several short run average cost curve. So these are your SSE. Each of these SSE are independent plans that has been put into business. All right. Now a businessman will always try to produce at the maximum, at the lowest point of each of these plants to achieve productive efficiency. Now let's say if I purchase one plant and I'm producing at the minimum point of this plant, it means I have got great productive efficiency in that plant, and this is my output and this is my average cost, correct? Now if I use the same plant to increase the level of output, all right, you cannot use any plant more than its optimal capacity. So what will happen with the increase in the level of output? You see output is increasing and your average cost will also increase. It means total cost begins to increase at an increasing rate. So we are not going to use the same plant, we will buy another plant. When we buy another plant, you'll find that I am able to increase my output but my average cost is falling. Now don't get confused, if average cost is falling, that doesn't mean that total cost is falling. It means total cost is increasing at a diminishing rate. It means if this was my level of output, 10 units I was producing and total cost was, let's say, 100 and average cost was 10, then 20 units I'm producing, it may increase to 150 rather than 200. So now my average cost will become 7.5. Correct? So total cost increases at a diminishing rate. Again, the same logic will happen. The moment I reach the maximum potential of that plant, the productive efficiency, I cannot use this plant beyond its maximum potential, and because my average cost is going to increase now if I'm using the same plant. So what economics tells me? Buy another plant. So this way I keep adding more and more plant, and when I add more and more plant, what happens? I am scaling up my production. There will be what is known as internal economies that will happen due because I'll get good bargaining power for the supply of raw materials, large scale production. All my costs will not increase in the same proportion. As a result, my average cost will fall down. All right. But when businesses become big, they become very complex. And when they become complex, it becomes difficult to operate them. And beyond a certain point, business expansion will lead to increase in the average cost. It means now your total cost will increase at an increasing rate. So what happens here? You see 30 units if I'm producing, let's say it increases in from year to year, it increased by 50. Let's say it increases to 175. What is the 180? Let's say what is the average now? Average is 6. All right, 48 units I'm producing, let's say it increases to 200. What is my average then? Average is 5. All right, but if I produce this one now and it increases, let's say, to 300, then what will happen? The average will begin to rise. All right, the average will begin to rise. So I will, beyond this point, any business cannot expand because you will get diminishing returns to scale. But if that is the case, no business today, we see so many businesses are becoming giant in the world, correct? Today, Apple can produce, if the demand increases, don't you think Apple can produce as many phones that people want? Of course, infinite number of phones nobody can produce, right? If 8 billion people in the world want an iPhone, then Apple cannot produce that. But whatever the demand increases, let's say by 20 million, 30 million, Apple can meet the demand. Coca-Cola has plants in more than 100 countries of the world. So how they became big if this law is applicable? Now, due to modern technology. What happens due to adoption of modern technology? After reaching its lowest point, the average variable cost, let me draw it separately. What will happen is that the LSE curve, after reaching its lowest point, it will not rise up. All right, it will not rise up like this, but rather it will become flat. It means now I can go on adding more and more plant, and after reaching the lowest point, my average cost will not increase. It means I will forever remain at constant returns to scale. Now, it doesn't mean that your average is not increasing, doesn't mean that total is not increasing. It means what happens here, your average will become 5, 5 and 5 here. So when you're producing 50 units or 60 units or 70 units, your average will remain the same. It means total will have to increase in the proportion which in which the average remains constant. So here it will be 250, here it will be 300, and here it will be 350. So don't you think it increases in the same proportion by 50, 50, 50? And as a result, my average after reaching the lowest point, it will not rise up, it will gradually become flat. All right, clear? So it will become L-shaped. So if they ask the question why the LSE curve is L-shaped, is due to use of modern technology or advanced technology. Now they can also ask you certain question with regard to the LSE curve, and there be several permutation and combination of the question. So remember here, if I divide this into two equal parts, we see this is your average cost and this is the level of output. Initially, LSE is falling. Now the falling part of LSE is a good thing. Negative slope of the LSE is a good thing. Why? Because total cost increases at a diminishing rate. So when total cost increases at a diminishing, remember cost and return have inverse relation. If cost is increasing at a diminishing rate, it means returns are increasing at an increasing rate. Just think about the debit and credit side of your books of account. Let's say PL account. If your uh, credit side increases at an increasing rate, don't you think your net profit will also increase at an increasing rate? Correct? So if suppose your cost of production is very high, then your credit that comes to you will not be able to compensate for the high cost. As a result, you will incur losses. So when I am have more productive efficiency, it means I am able to produce more at a much lesser cost. It means my total cost is increasing at a diminishing rate. It means my returns are increasing at an increasing rate. So the falling part of the LSE indicate increasing returns to scale, which is a good thing. Why? Because total cost increases at a diminishing rate. So it's a good thing. No, total cost increases at a diminishing rate. As a result, LSE is going to fall. So it means I'm getting increasing returns to scale when there is a negative slope of the LSE. And increasing returns to scale happens due to economies of scale, which consist of internal economies and external economies. Whereas if total cost here on the other side, we see that total cost LSE has a positive slope, but it is bad. Why? Because in this case, total cost increases at an increasing rate, due to which what happened? LSE increases. It means I'm getting diminishing returns to scale, and diminishing returns to scale happens due to diseconomies scale that consists of internal diseconomies and external diseconomies. All right, clear? So that gets over our theory of production and cost. Now, market competition. Market. There are several types of market. We are not going to go into the concept of market. We are simply digging into straight away from long period market, short period market. Is very simple. I've mentioned in the quick revision note. You'll be getting it. That's I don't need to explain that. So let's dig into the concept. First of all, when we talk about perfect competition, there are market is divided into four different competitive models. So on one end you have perfect competition, and other end you have monopoly. As we go towards in between, closer to perfect competition and further away from monopoly, we have monopolistic monopolistic competition, and further away from monopolistic and for even closer to monopoly, we have oligopoly. Oligopoly. So as we move from perfect competition towards monopoly, level of competition is going to decrease, and price and competition has inverse relation. It means greater the amount of competition, lower will be the price, and the competition in the market decreases, then the price is going to increase. So higher the competition means because sellers are fighting with each other to attract customers. So of course they have to lower the price according to the law of demand. So people will run to those sellers. Of course, holding all other factors constant, that in there is no difference in the quality of the goods that you are offering to the consumer. All right. Now perfect competition, we say it's an ideal construct. It doesn't exist. Then why do we study about it? The simple answer is perfect competition gives us an ideal model, and when we compare other competition which are not so perfect, we will be able to find out the level of imperfectness in the market, in the other market. So it provides us a benchmark. But if they ask you which competition is an ideal construct, it doesn't exist in the market. Only a theoretical reality is perfect competition. They may also ask you that which market closely resembles a perfectly competitive market. It is the agricultural market and perishable goods market. That is the market that will tell us that yes, it's closer to a perfectly competitive market, but actually in reality perfect competition do not exist. So there are certain characteristics of perfect competition. So what are these characteristics? First of all, homogeneous goods. There are large number of small sellers. Now small sellers, what is the relevance of this small? The sellers are so small not with regard to their investment, but with regard to their power to affect the market. There are so many sellers that the market has been distributed among such number of sellers that one seller by increasing or decreasing the level of output cannot affect the market price. Every seller is a price taker, nobody is a price maker. That is one of the unique feature of a perfect competition. And we say that the goods sold in a perfectly competitive market are perfect substitute or homogeneous goods. Now remember, there are various synonyms they will use in the paper in the examination for perfect substitute. You call it identical goods, you call it undifferentiated good, you call it perfect substitutes, or you can call it as uh, homogeneous goods. You can heterogeneous नहीं heterogeneous other market में होता है. So homogeneous good, non-identical goods, perfect substitutes. All right. So all these undifferentiated goods, these are the four prominently used terms. Then we say that firms are price taker. This is a unique feature. It means any firm entering the market has already given the price through equilibrium. Nobody can afford to sell at higher market price because nobody is going to buy the product. Because if everybody is selling a perfect substitute, why will I pay even a penny more to buy the commodity? And of course, there will be no price discrimination. Price discrimination is when the sellers are charging different prices from different consumers. So there will be no price discrimination. We say there is free entry and exit because the firms will not be able to create a price barrier. If I have a monopoly, then I will create various kinds of barrier. One of the most influential barrier is the price barrier, wherein I will say that if any firm is going to enter the market, I will lower the price so much, then you will not sustain. I can sustain because I have been earning profit since long. You cannot sustain to operate at a low profit margin or loss making margin for long, and when you are wiped out, I will increase the price. So every new seller trying to enter the market knows about this fact, and so nobody tries to even penetrate into the market. So I will have a control. But here everybody is fighting with each other. Nobody is controlling a big chunk of the market, and not one particular seller will be affected when one new firm enters the market. So there is no reason or no possibility that you can erect a price barrier to block the entry of any new firm. So there is free entry and exit of any new firms into the industry. All right, normal profit. So you see, losses and abnormal losses can happen in every business. Even a monopolist can incur losses. People don't buy the product. If the government is running a monopoly, for example, railways is run by government, is it running at a profit? No. So monopoly can incur losses. Anybody can incur losses, and also abnormal losses. It can be common to any business, because imagine if there was a possibility of any particular business wherein always profit will happen, then everybody will start that business only. All right, clear. But abnormal profit or supernormal profit is the same thing, is not possible in every business. It's not at all possible. And in case of perfect competition, there is not at all a possibility. Why? Because you are not able to discriminate the price, you are not able to exploit the consumer, and you are selling at a wafer thin margin of profit. All right, so there is no possibility either in the short run or in the long run for you to earn abnormal profit or supernormal profit. Losses and abnormal losses can happen to you at any given point in time. Clear hai? All right, and we say that of course there will be easy entry and there will be no advertisement cost. Meaning what? You see, when everybody is selling a why, what is the purpose of advertisement? There should be some difference in the product, 1%, 2%. Through advertisement I can exaggerate the difference. All right, I you see, every product is number one everywhere in the world. Ariel is also number one, Ghadi detergent is also number one, Nirma is also, there is no number two. Who the hell call its brand number two? 5 rupees soap bar is also number one bar in India, maybe in the world, and 500 rupees soap bar is also number one in the world. All right, clear. So what happens here, you, there is a little bit of difference, but through advertisement I can magnify the difference. I'll create kind of illusion in the minds of the consumer, and consumers will be willing to buy for a product. But when one of the assumption in a perfectly competitive market we take is that people have perfect knowledge about the market. So people know how many sellers are there, what is the characteristic of the product, what is the margin of product, everything is known by the by everybody. So I'm not in a position to exploit this to my advantage. So there is no advertisement cost, whether in the short run or in the long run. And of course, when I'm earning a small margin of profit over my cost, I cannot afford to give any kind of advertisement. And logic says, if everybody is selling same commodity, a perfect substitute, don't you think if I advertise for my product, I'm basically advertising for everybody's product? So there'll be no advertisement cost. All right. And two assumptions are taken in perfect competition. The first one we have already seen, that people have perfect knowledge about the market, and second one, there is absence of transportation cost. Now, when we come to pure competition is very similar to perfect competition, with two assumptions that we have taken here is not obeyed. Rest of all is everything is same. And we say that the demand curve in a perfectly competitive market is a horizontal line, because the firms are price taker. So the market is giving the price. The only way you can increase your profit is by increasing your sale volume. So everybody is earning 1 rupee of profit. Somebody is selling 1 lakh unit, he will make 1 lakh rupees of profit. Somebody is selling 10 lakh unit, he will be making 10 lakh rupees of profit. But you cannot expect to earn the profit by increasing the price. You lose all your customers, because people will not be willing to pay even 10 paisa more for a perfect substitute that is sold by many other competing firms. Clear? All right. So one of the reason that you will find here, we know that price is always equals to AR, but a unique characteristic of a perfect competition is that you will find that AR is equals to MR all the time. And what is the reason that AR is equals to MR? Because the firms are price taker and not price maker. So if suppose if I write here price, and if I write here quantity, and I want to calculate what is your TR and what is your MR and what is the AR, if I keep the price same and I increase the quantity, let's say 1, 2, 3, 4, 5. So you have TR 10, 20, 30, 40 and 50. MR here is nothing. But here 20, what is the change in TR? 20, 10 divided by 1. So 10, 30, then again 10, then again 10, then again 10. And this you will get, of course, 10, 10, 10, 10 and 10. Clear? All right. So MR and AR is same, which is the unique feature of a perfectly competitive market. And you'll say, sir, you have taken simple quantity. You take any quantity, no? You take 20, 80, 50, 90, 200, you'll get MR and AR is same till that, because the price is constant here. So AR and MR will be same. Now equilibrium. The industry will achieve equilibrium at the point wherein the demand and the supply are intersecting with each other, as we have seen yesterday. So this is the equilibrium market price. This is the equilibrium quantity, demand and supply. Now remember, this quantity is for the entire industry. All right. So this is the demand and this is also the supply. So if I take supply, supply is the output of all the firms taken together, not a single firm. All right. And when we look at equilibrium for a firm, then we have to do what? We have to extend this line from here to here, because the market is giving me the price, and this will become, this is again your revenue and cost here, and this is your level of output. Correct. Now this is your marginal cost. So for a for a particular firm, the marginal cost for a particular firm, the equilibrium will be achieved at the point where MR is equals to MC. For the industry, it is demand and supply. Because you see, if I'm producing over here, this is your MR, correct? All right. You see, let's say rupees 10 is the MR. You're producing over here and come from here. This also points down to your cost. What is your cost? Let's say your cost is 4 rupee. So you have this much area, which is you are in the positive zone. When you're producing this level, again MC comes down. Here also MC is increasing, but still MR is more. Here MC is increasing, still MR is more. Here MC is still increasing, MR is more. And here when MR becomes equals to MC, you know that you have reached the maximum profitability point. This is the point which is known as equilibrium for the firm, wherein MR is equals to MC. If by mistake you go to this point and you produce this level of output, then what happens here? Your marginal cost is higher than your marginal revenue. It means the cost of producing this additional unit is higher compared to the revenue that you're going to earn from it. So you are in the negative zone. So if MC is more than MR, you should decrease your level of output and come down to the point where MR equals to MC. You will increase the level of output till the time MR is greater than MC. So we come to these 3 points here that is very, very important. First, MR, the MC curve will cut the MR curve from below. At the point MR equals to MC, that is the point of equilibrium for the firm, which is also known as point of profit maximization, because this is the point wherein highest possible revenue is earned by the firm. When MR is more than MC, then you should increase your level of output. And when MC is more than MR, you should decrease your level of output. Clear hai? So the equilibrium for the firm will be achieved at the point where MR is equals to MC. But what about the profitability point? So in case of perfect competition, if I want to find out where my profit lies, again, this is your revenue and this is the cost and this is the level of output. So this is your AR and MR curve. AR equals to MR in a perfectly competitive market. This is your AC or ATC curve. AC or ATC curve. You can call it LAC curve as well. And this is your MC curve. Now at this point, what you find here is that we have to now compare what? We have to compare AC, AR, ATC, sorry, AC with AR we have to compare. Now at this point, you can see that you have AC is more than AR. This is your AR. Now you cannot change the AR. Why? Because AR equals to price and you are a price taker. So the concept of abnormal profit you'll never earn. But here your AC is more than AR, so you are incurring losses. If AC increases significantly, it is higher to AR. If suppose AC is over here, then this loss is an abnormal loss. The greater the gap between AR and AC lies above AR niche AC ये normal loss है, but this is your abnormal loss. All right. So as I increase the output, my average cost decreases. Why? due to better utilization of resources, specialization of labor, internal, external economies. So you see here, now my average cost come down to this point. So my loss decreases. Further, I produce my AC will again come down to this point. And at this point, AR equals to AC or ATC, I'm earning normal profit. Now, why when AR is equals to AC or ATC, I'm earning normal profit? Remember, I've told you that in case of, let's say, same logic is applicable on the average level as well. If suppose, if I say AR is rupees 100 and AC or ATC is also equals to rupees 100. Now this 100 consists of both explicit cost and implicit cost, that is accounting cost and non-accounting cost. Let's say explicit cost is 80 rupees and implicit cost is 20 rupees. So it means from your AR, which is 100 rupees, if you deduct less explicit cost or accounting cost, that is 80, you'll get what is known as accounting profit. Only after you deduct implicit cost, that is 20, you get zero economic profit, but you are getting normal accounting profit. And that's the reason we say that at this point AR equals to ATC, you are still earning economic profit is zero, but accounting profit is there with the firm. And if you further go beyond this point, then what happens? Then again, your AC is higher than your AR. This is your AR, the straight line. AC is higher than your AR. It means again, the losses will keep mounting. And if you're producing at this point, then you see your AC is way higher than your AR. As a result, your loss will turn into abnormal loss. All right, clear? So, and here, why you will not get abnormal profit? I will get abnormal profit if I'm not a price taker, rather a price maker, but that is not a possibility. But if I'm able to increase the average revenue to this point, and here can you see now your AC at this point is lower than your AR is higher. So then in that case you are earning abnormal profit, but this is not a possibility. Clear? So 3 points you have to remember here. When AR equals to AC or ATC, you are earning normal profit. When AR more than AC or ATC, you are going to earn abnormal profit or supernormal profit. But when AC or ATC is less than AR, then you are earning losses and abnormal losses. Then we come to what is known as production continue and discontinuation decision. Now, in the short run, when a business is incurring losses, it is not necessary that a business have to be shut down. A businessman will always compare. What he is going to compare? He will compare his average variable cost with the price, that is the AR. And there are three situations you will get. In two of the situation, you should continue to produce, but in one situation, the losses will be significantly higher. As a result, it calls for a shutdown temporary for that particular business in order to decrease or minimize your losses. Losses can never be avoided. If you are incurring loss and you shut down, that doesn't mean your losses will go away. The losses will come down. So you see here, if I write here AR, which is nothing but equals to price, is equals to AVC, in that case we should continue to produce. Why we should continue to produce? Let's say AR, you got rupees 100, that is your average revenue. Your AVC is also rupees 100 plus your AFC is, let's say, rupees 50. Now it means from your average revenue you are able to recover all your average variable cost, and the only burden is the unrecovered part of the average fixed cost. Correct? It means what is my burden of loss? My burden of loss is 50 rupees. If I shut down, what will happen? If I shut down, it means this will not come down to me, but this will also I not incur. Then what is my loss? My loss remains exactly the same. Correct? So don't you think it is better to shut down, or it should continue? I should continue, because nothing is going to change if I continue. Because if I continue, then I can come to a situation wherein AR may increase. All right. AR price, market price, I'm not controlling, but it may increase due to market forces. And AR is now greater than AVC. So in that case, if suppose now AR increases, let's say AR increases to rupees 120 and your AVC is rupees 100, your AFC is rupees 50. So from this AR, you cover all of your 100. This is done. And this 20 rupees is also covered. It means the burden of loss is how much for you? 30 rupees. Correct? It means, don't you think the burden of loss has come down due to rise in price? But if I shut down right now, what will happen? If I shut down right now, it means this average revenue is not going to come to me because I'm not selling anything. Who is going to pay me? But I will not incur this also. But this 50 rupees will be my loss. So don't you think if I shut down, my losses will increase from 30 rupees to 50 rupees? So I should continue to produce. So this is the good thing can happen. But in a business, bad thing can also happen. What if AR falls down? Now AR is lower than AVC. So what if AR is rupees, let's say 80, and your AVC remains at rupees 100 plus your AFC is rupees 50. So from your AR, you are able to recover only 80 rupees, the 20 rupees of loss still not recovered, and here 50 rupees of loss not recovered. So total loss is rupees 70. But if you shut down, what will happen? When you shut down, this 80 rupees will not come to you, and this 100 rupees you will also not incur. So the losses will be only 50 rupees. So we can conclude that when AR is equals to or more than AVC, then you should continue to produce. But if AR is less than or AVC is less than more than AR, then you should shut down temporarily. And also remember, AR equals to AVC is also known as shutdown point. Then you'll say, sir, if I'm not shutting down, why do we call it shutdown point? What is the reason? Because we are standing on the cliff. Even 50 paisa fall at this from this price, I will have to definitely shut down. So this is a shutdown, but you should continue to produce. Keep that in mind. Clear? Hai? All right. So let's continue. Now comes what is known as monopoly or monopolistic market. Let's cover first. Monopolistic market. Now, what is monopolistic? Monopolistic market is the market that we are surrounded with. As simple as that. We are surrounded by the monopolistic market. 95% of the products sold in the world market has a monopolistic demand. Is a monopolistic market has become a monopolistic market. More than 90%, 95% of the product. Because we say that if any product is sold by more than 10 firms, it has a monopolistic market. All right. So don't you think so many items that you have purchased is sold by more than 10 firms in the world today? Whether it's a cloth, whether it's a shoe, whether it's a toothpaste, whether so many items are there. So the world market has become a monopolistic market. In a monopolistic market, the firms again are considered small. Why again? Remember the word small. Small here means not in terms of your investment. Sir, AFC shall also come down. Yes, AFC will only come down when you increase your level of output. Aditya. No, monopoly is not an ideal construct, dear. Only perfect competition is an ideal construct. Ashoka. Alright. So, monopolistic market, the firms are considered to be small because these firms, why they are considered small? Because any firm cannot affect the market price to its output decision. Tell me one thing now. If ITC says tomorrow मैं bingo chips produce नहीं करेगा, do you think there will be shortage of chips and the chip price will increase like the price of tomatoes? No. Because what happens here, there are so many players in the market. If one seller decreases the level of output, then others will increase. The market will not suffer from severe scarcity at any given point in time. All right. And when there is not much difference between demand and supply, then the price will remain stable. So ITC, if suppose Maruti shutdown is planned, then what will happen? Kia and other companies will increase the production. Do you think the price of car will by shutting down? No. But so these firms which are controlling 1%, 2%, 3% of the market, they cannot affect the market price toward the output decision. To control the market, to affect the market price through output decision, you have to control 30, 40% of the market. For example, the same company ITC sells cigarette and it controls 70% of the market. So if ITC decreases the output, then the price of cigarette is going to increase significantly. All right. But if Baba Ram they stop producing, uh, you know, shampoo, do you think the price of shampoo will increase? No. So no seller is big enough to control the market and affect the market price to its output decision. That's why we are adding the word small. It doesn't mean that the company's investment is small. All right. Next, we say that the firms they do not discriminate the price, because when there is competition usually you do not discriminate the price. There is easy entry and exit in and out of the market because every seller is fighting. You see Swiggy pe kitna restaurant hai, it has become a monopolistic market. If I want to again open a cloud kitchen and get my restaurant listed in Swiggy, do you think uh, you know it will affect any company, any one particular company? डू यू थिंक एनी कंपनी विल ट्राई टू, नहीं ये आ गया शान सर आ रहा है बर्गर बेचने के लिए, हमारा बिजनेस डाउन हो जाएगा, बर्गर नहीं बेचने देगा इसको? नो बडी, एवरीबडी इज फाइटिंग, बिकॉज व्हेन यू ओपन अ बर्गर शॉप, who is going to lose some of its customer? Nobody knows. Is it McDonald's customer will come to me or KFC customer will come to me? They don't know. And everybody is operating at a level wherein you are a small seller in terms of not investment, in terms of your market control. So monopolistic market, so firms are considered small and you can easily enter and exit the market. Now in a monopolistic competition, advertisement play a very very important role. Why? Because there are so many products, you have to create a story, otherwise you will not be able to fool the customer. All right, kitna kaise customer? So everybody will say this is better, that is better, this is better, this that. They are fighting on the television every now and then, and the advertisement has become so penetrative. Now you see 20 advertisement in a day. Search something on Amazon, AC खरीदने का, देखो Instagram पे रील भी आएगा एयर कंडीशन का, Facebook पे रील भी चलेगा एयर कंडीशन का. It means whatever you are doing, even now when you're talking, your phone is listening to you. You want to apply this trick, आज घर जाके बोलना, you talk about any particular product 20 times after, एयर कंडीशन मेरे को खरीदना 20 times, and you just open your Insta page or you open your Facebook page and you see, you'll be shocked what you'll see. Your phone is listening to you. All right, they are recording the data. Yes, you can turn it off. There is a process to turn it. Just Google, you will find it out. I've turned it off. All right. So now I'll see less advertisement. Clear. So, and of course, it consumes a lot of your battery as well. You'll find that your battery life is going to increase when you turn it off. So again, monopolistic market. So advertisement play a very, very important role. That's why we say it is a non-price competition. What is the meaning of non-price? Businesses do not compete largely on the price, they compete on advertisement. They will spend so much of money on advertisement that people will go mad and they will buy the product. Celebrity endorsement, this and that. So that's why we say non-price competition. Now, can a monopolist earn abnormal profit? If they will be earning only in the short run, never in the long run, due to unique feature of a product. If example दिया था ना आपको Apple का, when Apple comes in every phone, some new feature is there. Sometimes it's truly a new feature, sometimes it's just nothing but bullshit. So when it came with a fingerprint recognition, that was a new feature no other phone gave. But Apple knew that this will be copied in within 3 months in all the major brands. And since this technology did not belong to Apple, it could not patent it. Correct? So what happened, for this unique feature of opening the phone using your biometric fingerprint was only available in Apple, and Apple sold the phone at a very high price. But in 3-4 months, what happened? Almost every other big brand, they started to give same biometric. As a result, what happened? Then unique feature is no more a unique feature for Apple, so the price will come down. So in the short run, due to unique feature of a product, you can charge a higher price and earn abnormal profit, but never in the long run. It is not at all a possibility. Clear? So That is about monopolistic market. So remember, in a monopolistic market, the demand will be what? Will be very high. Elasticity of demand, not demand, the elasticity of demand. Why? Because there are large number of substitutes available for any particular product, so consumer will jump from one brand to another. You want to buy a perfume, you see, you go to the shop, they will apply so much of perfumes on your hand that you will start smelling like a peacock. All right, and you will get confused. Their intention is to get confused, and so that you will ask him that, sir, कौन सा better है आप बताओ, then he will sell you the one that in which he is getting the highest margin. As simple as that. This is how selling happens. They will try to confuse you. You go to buy a television, the one television that they want to sell, wherein they'll get the higher margin, उसमें सब best setting है, contrast and everything is best, and that the one that they don't want the customer to buy, they will get a lower margin. बोलेगा पहले अच्छा मार्जिन का निकाल देने का, ये बाद में देखेगा. उसमें आपका कॉन्ट्रास्ट ये वो नीचे करके रखेगा, कस्टमर विल नॉट बाय इट. Alright, and they will not keep the remote next to you, so you cannot adjust to see the brightness and contrast. So do not go by them, do your own research when you're buying these kinds of product. So now there is so many small feature that will be exaggerated, and they will it will make consumer a lot confused. You don't know what to buy, so you will quickly jump from one brand to another like a monkey. So we say that the elasticity of demand is very high due to availability of large number of substitute, and the cross elasticity of demand is also very high because very similar products are available in a monopolistic market. And also remember, again, the same logic here, it goes in monopolistic market. So here AR and MR curve are downward sloping, and this is your MC curve. All right, AR curve is also known as the demand curve. We have seen why, because AR equals to price, and at this point you have MR is equals to MC, that is the point of equilibrium. Because if I take any other point, you see here is the marginal cost, and here is the marginal revenue. What did I tell you? When MR is more than MC, you should increase the level of output. When you come down to this point, this is your MC still lower than your MR, and if you come down to this point, then you can say that your MR is equals to MC. And if you produce at another point, sorry, if I produce at, let's say, this particular point, then what is happening? This is your MC and this is your MR. So MC is more than MR, you should decrease the level of output. So equilibrium will again be achieved at the point where MR is equals to MC. Clear hai? Then comes monopoly market. Monopoly can be of various types. All right. Monopoly can be of various types. Sometimes even government can allow you to have a monopoly, but government will try to always decrease the instances of monopoly in the market, that too unnatural monopoly that can happen through acquisitions and mergers. Because monopoly is bad, we'll see that monopoly will lead to decrease in the level of production because a monopolist. Now remember, when I say monopolist, I don't mean monopolistic. I mean a person who is having a monopoly. Because a monopolist will intentionally underproduce, leading to rise in unemployment, less than optimal utilization of resources. It will keep the price high by underproducing, lead to consumer exploitation, decline in consumer surplus, lower taxes for the government. So all in all, everybody is affected. The government in terms of tax revenue is affected, unemployment and GDP is affected, the price is very high, so consumer surplus is affected, so everywhere is negative. But yes, sometimes government run itself a monopoly because the intention of the government is not to make profit. When the government is running a monopoly, then government is running for either social welfare purpose, to promote equality in the society, to decrease social stratification and increase the level of equality, to promote well-being of the society if you are running a welfare state, and to keep the employment level, to compensate for the fall in the employment level that happens in the private sector. Government can also have some say in the employment in level in the country. So profit earning is not the primary motive, it is the secondary motive. But for a private sector, it is not the country, it is not the people, it is they themselves and the profit. That's why government have to be very, very conscious about when it can and when it cannot apply monopoly, allow monopoly. So in most of the developed countries of the world, most of the modern economies of the world, you will find there are specific laws which prohibits any kind of collusion, any kind of monopoly, unnatural monopolies that can happen due to acquisitions and mergers. Saying this, government itself, as I've told you, can allow some people to have monopoly by giving patent and copyrights or trademark. Because you see, understand, if the government is not giving you the patent rights, then government is not allowing innovation to happen in the country. If I'm a scientist, I've spent my life, my life and blood to invent something, and I know somebody will reverse engineer it and make it a very similar product, then what is the purpose of me spending my lifestyle, and my money on this particular thing? So government says, don't worry, this is the new invention, this belongs to you for 20 years, you can use it. If you don't have the money to produce this particular commodity, you can give it exclusive right to some other firm to produce it, and you will share the royalty. He or she, that particular firm will share the royalty with you. So government will give this exclusive right to me to promote innovation. Sometimes it is also, for the economy, it is important that only one seller produces, because economies of large scale can be achieved. But on and off, generally we have private sector में monopoly को avoid करने का. So monopoly, it means that a seller is alone. There is one dominant firm having significant control over the market. There is a lot of entry barrier. Nobody will be able to enter the market freely. There will be price discrimination. Monopolies will charge different prices for the same product in different markets or from different consumers. Monopolies can earn abnormal profit even in the short run, and in the long run, losses can happen to anybody. So don't worry about losses. If they give you the question, can monopoly, can there be a loss in monopoly, abnormal loss? The answer is yes. If they give the option of monopolies can never incur losses or abnormal losses, it is false. Generally, the monopolies will earn abnormal profit even in the long run. Advertisement, in the short run, I can incur some amount of money for advertisement to create awareness among the consumers that I am the only seller. But in the long run, I don't need to advertise, because I don't need to differentiate my product with another product, because other product does not exist in the market. All right, clear? So this is the classic case of monopoly. But remember, we say that a monopolist can either decide price or output and not both. Why? Because sometimes they try to confuse you that if a monopolist increases price, will its demand fall down? Yes, it will fall down, but it will fall down by a small margin. Let's say there are 5 sellers in the market selling similar product. Now I am buying the product from A. All right, let's say I'm buying 20 units. All right, A increases the price. I have so many other options available. Don't you think I will be able to decrease A from 20 to only 2 units and increase 18 units from these other firms? So I will be elastic. Why? Because I have a lot of substitutes available. But if if there is a monopoly, these sellers do not exist, and then the price is increased. Of course, I'll decrease, but will I be able to decrease it by 18 units? No. Why? Because I cannot substitute it with other. I will decrease it from 20 to maybe 16 units, maybe 19 units, maybe 18 units, but I cannot decrease it by 18 units and go to only 2 units I'm consuming. So when a monopolist increases price, when the price is increasing, then its demand will fall down, but not by much, because people have no other substitutes. So they will only buy what they can afford on their budget line. We say that cross elasticity of demand in case of monopoly is 0. Remember, elasticity of demand is E less than 1, but cross elasticity is 0 because there are no substitute available, and the equilibrium will be achieved in the same way. MR equals to MC. Just keep that in mind. When MR is more than MC, you should increase the level of output. When MC is more than MR, you should decrease the level of output. You should achieve MR equals to MC to achieve maximum profitability. All right. So now remember here again, for price discrimination to happen, the 3 conditions must be fulfilled. First condition is that I must have monopoly power. Second condition is that it should not be possible for anybody to buy from a low price market and sell in a high price market. Because if I'm selling in Bangalore at 100 rupees and selling in Mumbai at 500 rupees, then don't you think people will purchase from Bangalore and sell in Mumbai? They don't have to start a factory. Can a monopolist block me from buying the product? The answer is no. How can you block me? Security guard लगा के रखेगा क्या? I'll send 10 of my friends buy product. The monopolist knows me. You go and buy the product. Do you think monopolist will know about it? Monopolist can say एक आदमी को एक प्रोडक्ट मिलेगा, मैं पूरा फैमिली मेंबर को भेज देगा, अपना पूरा यशस को भेज देगा, जाके एक एक प्रोडक्ट लेके आ, and I will sell in Mumbai. Correct. So what will happen here? People in Mumbai will buy from me, not from the monopoly, because a perfect substitute I'm selling. So don't you think I will eat away into the market of the monopolist? So I will buy in Mumbai from Bangalore at 100 rupees, sell in Mumbai at 300 rupees. My transportation cost and everything taken care of, still I will make huge amount of profit. So monopolies will only be, his sale will increase in the low price market, because the low price market is catering to Bangalore market also and also Mumbai market, and nobody buys the goods produced in Mumbai. So monopolies will never let this happen. So it means if it's selling in Bangalore at 100 rupees, he will charge 110 rupees in Mumbai. Now, is it possible for me to purchase from here at 100 rupees, incur additional cost, transport it to Mumbai and sell at less than 110 rupees? The answer is not. Not possible. So it should not be possible for anybody to buy from a low price market and sell in a high price market. And third thing, the most important thing, it should be the elasticity of demand should be different in different market. If in the market the demand is elastic, in that market the monopolies will charge a lower price, and where the demand is inelastic, he will charge a higher price. If in both the market the demand is elastic, in both the market he will charge a lower price. If in both the market the demand is inelastic, in both the market he will charge a higher price. Remember, if I'm exploiting everybody in the same way, that is also not price discrimination. So the three things. And AC Pigou gave three different degrees of price discrimination. First degree, he says that monopolies will be very powerful, and so he will take away the entire consumer surplus. He will charge the highest possible price. You know that a monopolist is exploitative, so I will be willing to pay a high price, and you will not give me any discount. In the second degree of price discrimination, the monopolist will charge relatively lower, not lower, relatively lower than the first category. It means in the first category, if you are charging 100 rupees, in the second category, second degree of price discrimination, you will be charging 98 rupees. You will not sell at 10 rupees. So there will be some amount of consumer surplus. But the most important price type or most prominent type of price discrimination is the third degree, wherein a monopolist will divide the market according to different types or different traits or different characteristics, and you charge different prices in the different market. This division can be done on the nature, on taste and preference. If the consumers are preferring fast food in a country, in some cities, I will charge a higher price where the preference is higher, because due to your preference, the demand will be inelastic, so you'll be willing to pay a higher price. But where the demand is elastic, I will charge a lower price. Or on the basis of demography, income also. So high income area, you'll see no fruit vendors. This is not a monopolistic monopoly market, but have you seen a fruit vendor going and selling to apartments wherein billionaires are living? 1 kilogram of mango will cost you 400 rupees. But if the same vendor will come down to other area, then the price of the mango will fall down to 200 rupees. Correct? So same product in different places, different prices are available. So in case of monopoly, I can charge different prices in different market based on a fruit example. Just I've given, fruit doesn't have a monopoly market. So different prices on the basis of population density, on the basis of age of the population, on the basis of gender ratio. If I'm selling cosmetic product in an area where more women are there, I will charge a higher price. All right, so on so forth. So these are the three categories of price discrimination that you have to keep in mind. And then comes oligopoly. Now what is oligopoly? Oligopoly can have different types, categories we'll see later on, but we say in an oligopoly there are 2 to 10 firms are there. All right, 2 to 10 firms. When there are only 2 firms, we call it as a duopoly, and more than 2 firms up to 10 firms, we call it oligopoly. So duopoly can also be called as a oligopoly. Now oligopoly has many similar characteristics compared to monopolistic market. First of all, the sellers here, now Dissimilar पहले करते, similar भी करेंगे. There are few big sellers, because if there are 2 to 10 firms, then of course some firms will be having 20%, 30% control in the market. For example, telecom sector in India, don't you think it's an oligopoly? Airtel, Vodafone Idea is one, Airtel and Jio. These three companies control 90% of the market, approximately. Correct? So the sellers are big and they have the power to affect the market price, by the way. Jio agar price 20% decrease karta hai, you see Airtel and Vodafone will also decrease the price. So I'm controlling 30% of the market, 40%, 35% of the market. Then I have the power to affect the market price through my output decision. So the firms are relatively larger compared to monopolistic market. Now the goods sold are similar but non-identical. It means the goods which are sold are similar but non-identical. It means they are substitute but not perfect substitute. What is the difference between a Jio connection and an Airtel connection? एक आपको Amazon Prime देगा, एक आपको Hotstar देगा, यही difference है ना? More or less it is similar product, right or wrong? Oil companies are also oligopoly market. आप BPCL से पेट्रोल लिया, मैं HPCL से पेट्रोल लिया. What is the difference? Is there much difference? Little bit here and there could be a difference. That's it. So not much difference. So oligopoly market hai ye bhi. Right. So the similar goods are similar but non-identical. Then again, will there be price discrimination? Usually no. Generally it will be no, because when similar products are sold by competing firms, if you try to exploit the consumer is going to run away from you. All right. Exceptional circumstances, that's a different thing. But generally there is no price discrimination. Then third, will there be barrier to entry? Of course, there will be barrier to entry. Because if suppose there are 2, 3 players, let's say for example, pizza industry in India, it's a partial oligopoly. We'll come to that partial oligopoly in a while. But we say that partial oligopoly is when you have more than 10 firms. So that's why it violates the principle of 10 firms. So monopolistic category mein chala jata. Then why do we call it partial monopolistic? Because it has more characteristic of oligopoly. Why? Because Domino's and Pizza Hut, they control 80% of the pizza industry in India. Correct? And all the other 20 smaller firms are controlling 20%. Tell me how many times in your life you have Domino's and Pizza Hut's pizza compared to other pizza? Most of the time Domino's or Pizza Hut only. Correct? Sometimes you may have a oven story, this and that, but not frequently. Clear hai? So you can have that. So it's a partial oligopoly wherein two firms control significant part of the market. They are considered as market leader. There is a price leadership situation. It means if I as a new company want to enter the market, and if I make the entry and if I try to sell pizza at higher than the price of Domino's and Pizza Hut, आप स्विगी में देखा, आप पिज्जा हट का प्राइस 500 है, Domino's price is 495, and you see my pizza, Shandar's pizza 1500. How many people will buy? Not many. One or two fools will buy. Correct. Even if I sell at 500 rupees, still not many people will say क्या है पता नहीं कैसा पिज्जा देगा, 500 रुपए में तो पिज्जा हट ही लेगा मैं. Maybe out of 100 people, 2 3 people will buy. But if I want to attract the customers, I'll have to price it 150 rupees में ले लो. Then you will say let's give it a try. All right. And when my rating will increase, then slowly by 20 rupees, 10 rupees, I will increase the price. This is how things happen in the real world. So there is a price leadership situation. But otherwise, we say that in case of a oligopoly, when we are talking about, there will be a strong barrier to entry because other players very, very difficult to enter. So similar and non-identical goods are sold, and the goods which are sold again are by big firms, big firm 30-40% of the market. So there is much of a similarity. So they can collude themselves. Collusion means they will can come together to block the entry of any new firm into the market. It means together they will be able to create even a stronger barrier, because in a monopoly you have to fight with one seller. Here I have to fight with the combined syndicate or combined organized oligopoly. That will be difficult for me. I mean, it will make it even more difficult for me to enter the market. So very strong barrier to entry. But one thing you have to understand, that this is also a non-price competition wherein advertisement plays a very, very important role. All right. You see how much of advertisements is spent by Pepsi and Coca-Cola. How much of money is spent on advertisement by, Reliance Jio and Airtel. वोडाफोन तो पता नहीं कब जाएगा कब आएगा. So Airtel, correct. So amount of advertisement huge amount of money they spent on advertisement. When global brand like Europe was and America, these two continents were bombarded with three brands: Nike, Reebok, Adidas and Puma. Alright, Adidas Puma अलग हुआ, Adidas से ही अलग हुआ. So Nike, Adidas and Reebok, they controlled more than 90% of the market, global market I'm talking about. And the amount of money they spend on advertisement, it was found that many a times companies operating cost का 60% advertisement hai. Alright, indirect expenditure, it means Nike is spending more money on advertisement than on making shoes. That is, so are they fool to do this? No, they are not fool. They know David Beckham has a 10 million follower. I'll give him $10 million, no problem. But if that 10 million followers का 50% भी मेरा product खरीदता है, then I will end up making 200 million of profit on that. So what's wrong giving $10 million to David Beckham? Alright, clear. I know that if I advertise my product and I bring Virat Kohli, उसको मैं 50 करोड़ रुपया दे दिया, 100 करोड़ भी दे दिया मैं. I know he'll have to do 3 times, 4 times on the television, Instagram आके बोल दिया बस, that is enough for me. My demand for my product is going to increase. Alright, वही एडवर्टीजमेंट में रिपीट कर करके चलाएगा, बार बार पैसा तो देने का नहीं, रिपीट करे, एडवर्टीजमेंट कॉस्ट इनकर करेगा मैं on the television and broadcasting rights I have to give, but every time I'm not going to pay. Alright, so I will make a lot of money. So from sales, so it's also a non-price competition. Alright, now in case of oligopoly, the demand curve is very, very unique. Alright, abnormal profit can be earned. Yes, it can be earned abnormal profit even in the long run in some cases if there is a collusion. Right, so kinked demand bolta. Why kinked demand? Due to price rigidity. If this is the price and this is the quantity, and you see this is the demand curve that makes a kink over here. Above the kink E is greater than 1, below the kink E is less than 1. Now why is it so? If suppose I am a seller and there are 5-6 other sellers, when I increase the price, let's say by 100 rupees, you will not increase the price in the same manner. You may increase the price by 10 rupees. I've increased the price by 100 rupees. You may increase the price by 10, 20. So still, after you have increased the price, still there is 80 rupees of difference. You are rigid not to increase the price in the same manner. Why? Because most of my customers will go to you. So when there is a big price difference, you see what happened? I increased the price by 100. So my price is here compared to your prices. You increase the price by 20%. So there is a big difference between my price and my competitor's price. So don't you think the customer will become very volatile due to the price difference? And significant of my customers will move from my product to your product. So if I increase the price, you see this is the P0 and Q0. And if I increase the price from this point to this point, P0 to P1, you see there is a relatively large fall in the quantity demanded because there is a difference between my price and my competitor's price. But when I reduce the price, let's say from P0 to P2, when I reduce the price, you see the demand does increase, but only from Q1 to Q2 by this margin only. ये margin है demand increase का. क्यों? Because if I decrease the price, let's say I reduce the price by 100 rupees, there is a big price difference. You have not reduced, I have reduced. So you start losing your customers. When you start losing your customers, I'll gain some of the customer. By the time I get 1 or 2% of your customer, what will you do? You will also decrease the price. The moment you decrease the price gap is fulfilled. There is not much gap. So don't you think those consumers who have not yet switched from you to me, will they anymore be switching? The answer is no. So the demand will increase by a relatively small margin because when I decrease the price, others also decrease the price. There is not much price difference. As a result, demand becomes inelastic. Clear? Hai? And there are different types of oligopoly that you have. And remember, this Kinket concept was given by who? Paul Sweezy. Sometimes they ask you here again. Different types of oligopoly. First of all, pure oligopoly, homogeneous product are sold. Differentiated oligopoly, differentiated goods are sold. Open oligopoly, no barrier to entry. Closed oligopoly, barrier to entry. correct? So then competitive oligopoly, when businesses are fighting, and when they are fighting, it leads to what is known as price war between them. So when they use the word price war, you have to mark oligopoly, and they keep eye on each other, because if there are 4, 5, 6, 7 firms, I can keep an eye. In a monopolistic market, it's not possible for ITC to keep an eye on every chips maker, not chip maker. Chip is for electronics, chips is what we eat. All right. So, all right, there can be a price war, and if there is a if there is a competitive oligopoly hai, and if there is a collusive oligopoly, it means the sellers will come together to collude. Collude means coming to a common understanding to protect each other's interests. So they will do what? They will form a syndicate. Many sellers are there, they will together form a syndicate. Like for example, in India recently, what has happened? The CCI has imposed competition on the cement syndicate, wherein Dalmia Bharat, ACC, Ambuja Cement, Ultratech, they came together, and they together increased the price. When it was complained, and CCI, hundreds of crores of fine was imposed on all the companies. So they will collude together, and by colluding together, they will create one giant form of kind of monopoly. The members of the syndicate will be the owner of these organization, and they will decide in which market the goods will be sold. So they will pool the goods to the syndicate, and syndicate, just like one giant seller, will supply the goods in different market based on demand and supply. All right. But even a stronger form of syndicate is known as organized oligopoly. In case of organized oligopoly, they do the same thing what is done in syndicate. They will join hands together to form a syndicate, and they will pool their output to the syndicate, and the syndicate will decide in which market to sell. But syndicate, what it will do, it will intentionally underproduce in the market. So demand is here, you decrease your supply. As a result, what will happen? When supply curve shifts to the left, supply hai, demand hai, and supply curve shifts to the left, you are decreasing the supply intentionally. What happens? The price is going to increase. So the difference between organized and syndicate is that organized also indulge in price fixing. All right, that's an end of your chapter 4. All right, what is the time? You can take 5 minutes of breather. 5 minutes. 5 minutes you can relax. What is going on? Shall we continue? Now, we're going to study about business cycle. All right. Now, business cycle, let's understand. I'll share the quick revision note here that we'll be sharing with you today itself. So just hold on. You see, this is the current one that I've made now. All right. So you see, in this quick revision note, whatever we have learned is given that will help you revise economics in a matter of, 5-6 hours, from at least from 1 to 6 chapter. For the from 7th chapter onwards, I've given you the handouts. So you will bring those handouts tomorrow as well. So you see, microeconomics, macroeconomics, all right, types of economy. This you will be given a cleaned one. Don't worry. Veblen effect, price effect, income elasticity, your demand, everything is mentioned over here. Supply concept, right? Theory of consumer behavior. You see the point that TU increases, MU diminishes but remains positive. TU is maximum, MU is zero. We have learned yesterday. When TU starts to fall or diminishes, MU becomes negative. Everything is mentioned over here. Now, types of cost also, everything we have studied here today. total fixed cost known as overhead cost does not change with the change in output. TFC curve is the horizontal or parallel to x-axis. So oligopoly also, you see, everything is given. Now business cycle. So you see, every economy goes through a business cycle. Business cycle is a phenomena which is found in a free market economy or capitalist economy where the government doesn't control the market. So business cycle is important for everybody to understand why. Because if you start a business at the wrong time, business cycle is periods of expansion and contraction. Now here you have expansion and here is the peak. After every peak there is a downfall, that is contraction will take place, and this is the depression or trough. Now these are simply the turning point. The economy cannot remain at peak neither at depression for a long period of time. So it means majority of the times the economy is at the stage of expansion and contraction. Expansion and contraction. Now why it is important for a businessman to know about it? Because even if you start the right business at the wrong time, when the economy is at peak and it begins to contract, and you start a business, for a couple of years, 3 4 years, you will be incurring losses. The demand will fall down, and then your business will start to make profit only when the recovery happens. But the question is, will you be able to survive till the time when the economy is going down? You may or you may not. So there is a risk. So what we'll do here, we will look back at the past. We'll try to find out what is the pattern of business cycle, and the pattern will repeat itself. So if I find out that every time the contraction happens for, let's say, 5 years, and recovery happens after 5 years, sometimes it's 5 years, sometimes 5.5 years, sometimes 6 years. So it means I found out somewhere the average or the median is 5.5 years. And right now economy is contracting. It has happened 10 times in the past. Now what is the mathematical probability that it will be repeated? Higher. It may not be repeated, but there is a higher probability it will repeat it. Business is only a game of taking risk at the right time, mitigated risk, calculated risk. There is no business without risk in this world. So what happens here, I found out, then I'll find out that economy has been going down since like 5.5 years already. It means recovery is very soon going to come. And then when I see signals, that is the in something that is indicating to me that unemployment has started to fall down, then quarter to quarter GDP has begun to rise, it will give me an idea that recovery has begun. So this is the right time to start the business. So that's why understanding the changes in the business cycle is very important. But also understand that business cycle will not have same longevity in the same period. More or less it will be same, but exact same you cannot say that last time contraction happened for 5 years, it will be also for 5 years. It can be for 6 years, it could be 7 years, it could be 5.5 years, it will be 4 years and 9 months or 10 months. It could be anything, but yes, there will be not such a huge difference. It means it will never happen that contraction went on for 5 years in the past 10 times. This time contraction will go for 25 years. It's not going to happen that way. So it has some pattern, and understanding the pattern is very important for not only for businessmen to take the right decision, but also for government to make the right policy. When the economy is going to recession, government knows is going through recession and contraction, then government should always reduce the taxes, increase the disposable income of the people, all right, reduce direct taxes, so that recovery in the economy can happen. Right. So both short-term and long-term decision by the businesses and the government can be taken care of. Business cycle, we say, is the natural rise and fall. Natural rise and fall doesn't has got nothing to do with nature. Natural rise and fall, it means it happens organically through the market forces of demand and supply. Sometimes the demand is more than supply, sometimes the supply is more than demand. So it will push the economy into different phases of business cycle. So every economy goes through the periods of expansion and contraction. Clear? Right. The peak and the depression are known as the turning points. There are four phases: expansion, peak, contraction, and depression. Before depression, if suppose the contraction has begun, at the time of depression, before we slip into depression, significant contraction is also known as a recession. So wherever they use the word significant, you will call it recession. Now it is important to know what happens during expansion. First of all, expansion में क्या होता है? GDP growth increases. So simply, if you already have the flow chart, so we say that GDP rate of growth is increasing. When GDP is increasing, then can I say that household income, that is all going to increase? It will lead to increase in aggregate demand for goods and services. All right. As a result, there will be increase supply, but to increase supply, you have to increase the level of production. So production increases. When production increases, then it will lead to increase in employment. All right. And of course, it will further lead to increase in increase in the GDP. And due this will again go back and increase the household income. Cyclical way जा रहा है. Then what will happen here? Can I say when demand is rising, all right, then businesses are able to sell at a relatively higher price, so the profit of the sellers will increase. Government revenue from tax revenue of the government is going to increase. It means doesn't mean that the government is increasing taxes. It means simply if 10 cars were sold and government was taking 10 million cars were sold and government was taking 28% GST. Now 20 million cars are sold. Same 28% GST will it not give more revenue to the government? Of course, it will give more revenue. When businesses profit is increasing, then what the businesses will do? Businesses will borrow more. Correct? Borrowing will increase. That will lead to increase in the capital creation. Capital formation will increase. But when the borrowing is increasing, it means the demand for loans is increasing. Don't you think the bank will increase the interest rate? Because simply the if I'm selling this pen, this is the commodity for me. The banks are selling loans, so loan is a commodity for the bank. The bank will increase the rate of interest, as simple as that. But when everybody is producing and when everybody is consuming more and more, don't you think this will lead to further increase in capital? Will it not lead to increase in money supply? All right. But the necessary outcome इसमें क्या होगा? इसका side effect क्या होगा? There will be increase in inflation. There will be increase in inflation. So here we are talking about the demand pull inflation because the demand has increased, so the price level has increased. Eventually, the economy will reach at peak. Now at peak, the economy will have highest level of employment. Now it means उसके ऊपर नहीं जा सकता. At that point in time, the cost of living will increase. Why? Because businesses are producing more and more, they're borrowing more and more, they're paying interest more and more. Can they afford to sell at a lower price? No. They will increase the price. When they're increasing the price, people income is also increasing. People say no problem, I pay kar dega. All right, because your income is increasing. Correct. When your income was 1 lakh rupees, you will say no, I'll not take a car loan which is at 12%. But your income is 3 lakh rupees, you will take a car loan at even 17%. Correct. And businesses, they know when the demand is increasing, they can pass on the entire burden to the consumer, and still the demand may not fall because you people are increasing the demand for the product and the price is pushed up. So that's why inflation is increasing. Cost of living is very, very high. Businesses are making huge amount of profit. So everything is hunky and dory. But what goes up must come down because this will lead to overheating of the economy. Inflation will be at the highest rate. So it is the consumer who took the economy up. It is the consumer that is going to bring the economy down. At some point in time, consumer will say very expensive and they will cut down their consumption. The moment they cut down their consumption, what will happen? Businesses will have unsold stock. And when businesses have unsold stock, then businesses will do what? Decrease their production. When their production will decrease, it will lead to increase in unemployment or decrease in employment. When unemployment increases, then household income will decrease. And when household income will decrease, there will be further increase in demand and businesses will suffer. Businesses are in trap. So businesses said that I will, you know, to cut down my cost, I will retrench some of the employees. But when every business does that, then household income will fall severely. Then even the demand will fall further and businesses will start to incur losses. All right. Some businesses will incur losses. Some businesses will go through, you know, significant fall in revenue. When the revenue is falling, do you think they will go for a new loan to be taken from the bank? No. The demand for loan will decrease. When the demand for loan is decreasing, if the demand for this pen is decreasing, I'm selling this pen, what will I do? Will I increase the price? No, I decrease the price. So the bank will try to lower the interest rate, but nothing to avail. So interest rate is going to fall down. But still businesses are not able to pay the previous loan that they have taken. How can they afford to take a new loan? So businesses will suffer from what is known as liquidity problem. Non-performing asset with the banks will increase. All right. What is non-performing asset? If I've taken a loan, the bank will show me on the asset side, debtor side. Bank is my creditor. I will show the bank on my credit side in the balance sheet. The bank will show me on the asset side. But if my credit worthiness becomes questionable, then the bank will have to create a provision for doubtful debt. The 100 crore ka pending interest per principal is there, but will this person be able to pay the interest and the principal sum? Out of 100 crore, he may not be able to pay 20 crores, or 20 crore ka provision for doubtful debt the bank is going to create. That is your non-performing asset. So then the bank is liquidity problem. So everything is going down, and of course government income from taxes will also go down because the consumption rate is going down. Then the economy will go into depression. Now depression is the lowest point to which any economy can grow. Okay, can go, because beyond this point there is nothing. There will be destruction. So the economy has to come out of depression very quickly, because what happens in depression? In depression, the GDP growth rate becomes negative. Remember, in contraction, it's not that the economy is not growing, it is growing at a slower rate. So don't you think when government says that GDP rate right now in India is 5%, if it falls down to 3%, it means we are growing, but not at 5%, but at 3%. Recession aa gaya. We are growing at 2%, we are growing at 1%, but if suppose today we produce and the value of the output produced is less than the value of the output produced in the base year, so we have negative growth rate. GDP has become negative now, the rate of GDP. So in that case, what will happen? The rate of unemployment will be highest level. Business shutdown will happen. Bank will go from liquidity crisis rather than liquidity problem. All right. Everywhere there is a problem. Inflation will go down significantly, but that's not a good thing. When the growth has become negative, then inflation is going down. So that is depression. And recovery again, when again re-expansion in the economy happens. Clear? Hai? So three instances of uh, economic depression is given in your book. That is 1929-30, that is the Great Depression. Then again 2000, that is IT bubble bust. And then 2008, that is your subprime crisis. There you will read it from your book. So you see everything is mentioned here. You see here, say for example, business cycle is a rhythmic fluctuation in aggregate economic activity experienced over a period of time. Business cycle is the natural rise and fall in economic growth occurs over a period of time. It helps in analysis of better decision making by businesses. These economic fluctuations occur again and again, but not always as regular intervals, nor they have the same length. Trade cycle or business cycle is composed of periods of good trade characterized by rising prices, low unemployment percentage, altering with periods of bad trade characterized by falling prices and high unemployment. It means expansion hai and then contraction hai. Phases of business cycle expansion also called as boom or upswing. Peak, sorry, boom nahi bolenge yahan. Ye please, I'll make it correct here. This is expansion hai, upswing hai. Peak or boom prosperity, contraction also called downsizing and recession, and trough, that is depression. So expansion, the expansion phase is characterized by, you see, increased national in output, employment, aggregate demand, capital, consumer expenditure, sales, profit, rising stock prices, bank credit, interest rate, everything increases. Peak, peak refers to the top of the highest of the point of business cycle. In later stage of expansion, inputs are difficult to find as they are short of their demand, and therefore input prices increase. Output prices also increase rapidly, leading to increased cost of living and greater strain on fixed income earners. Contraction, economy cannot continue to grow endlessly. So as mentioned above, once peak is reached, Increase in demand is halted and start decreasing certain sector. During contraction, there is a fall in level of investment, employment. Trough or depression. Depression is severe form of recession and is characterized by extremely sluggish economic activity during the phase of business cycle. Growth rate becomes negative. Level of national income and expenditure declines rapidly. Demand for products and services decrease. Price at their lowest and decline rapidly, forcing firms to shut down several production facilities. Recovery is nothing but re-expansion, you can see. Features of business cycle is very important. Love told you business cycle occur periodically, but they do not exhibit the same regularity. Business cycle have distinct phases of expansion, peak, contraction, and trough. Business cycle generally originate in a free market economy. Although all sectors are adversely affected by business cycles, some sectors such as like capital goods industry and durable goods, consumer हटा देने का, durable goods industry are disproportionately affected. So understand here, very important, they always ask question from here. Demand for everything will be affected when there is a change in the business cycle. But the demand for durable goods, you see here, there are two category of goods. On one side, you have durable goods, capital goods, and luxury goods. On other side, you have non-durable goods and services. When let's say contraction happening, demand for everything will fall down. But don't you think demand for this will fall down more sharply, because these are non-necessary commodity? All right. So the category A of good will fall down more sharply than category of B. Now let's say expansion is happening. When expansion is happening, demand for everything will increase. But again, don't you think people will be attracted more toward durable and capital goods and luxury goods rather than non-durable goods and services? So it means during both expansion and contraction, the demand for A category of goods will be affected more compared to the demand for B category of goods. Very, very important. Now, repercussion of business cycle gets simultaneously felt nearly all economies. It means output and employment, investment, consumption, interest rate, trade, price level, everything will be affected. That's why we say business cycle is synchronic. One sector, may originate in one sector, but it will affect every other sector. And business cycle are contagious and are international in character. So we are linked economy today. If there is a recession in China, Japan, and US, you see there will be a recession in India as well. Business cycles have serious consequences on the well-being of society and causes, internal and external causes given. Internal causes that can be controlled by an economy through internal policy decision making, through monetary policy and fiscal policy, whereas external will not be able, you will not be able to control. Internal will largely affect one country, but external will affect the entire world, global, multiple countries will be affected. But also remember, if your country is very powerful like United States, your internal will become everybody's external. All right. So internal causes fluctuation in demand. Now, how can it be corrected? When the demand is falling down, government should increase its expenditure. When government increases expenditure, people will have more money in their hand, or government will reduce the tax. So demand can be increased. Fluctuation in investment. Budget में देखो कितना government investment बोला. Can the government increase investment through fiscal policy? Yes. Variation in government spending, yes. Macroeconomic policy, monetary policy and fiscal policy can be changed by the government. Money supply, will see how it is changed by the monetary policy. And of course, psychological factors. Some people are optimistic about the economic growth and they will be willing to take a higher risk, start a business, invest their money. Some people will be pessimistic about it. External causes, war will destroy life and property. After war, when again rebuild, economy is rebuilt, then what will happen? Again, recovery of the economy will happen. Technological shock. Some countries who are not able to adapt to technology, don't you think? Poorer African countries, they will not be able to adopt technological innovation like 5G, AI, and everything. So they will be adversely affected. But rising economies like India, we can be easily adopting it. You see, India is among the top 3 countries in the world in terms of growth in telecom sector. India is number 1 country in the world the way we have appreciated UPI. Apple Pay and this and that came to America long time back. All right. In 1 year, what UPI transaction Indians done, that will be equal to UPI transaction done in US and China combined. Can you imagine? All right. सुलभ शौचालय में भी 1 रुपए देके आदमी जाता. UPI. All right. Yes. I mean, I was really astonished now in Jayanagar. People will come today, there's Lakshmi Puja, no? People came when I was leaving, people came here to my place and they were hanging the UPI code in there just like a necklace. You don't have money, UPI code, and neighbors came out, they were scanning the code and donating the money. I said, oh my God, salute. Donation ले रहा है UPI से. Trust me, the day will come, and this day will not come far off. Maybe end of the year, you'll see beggars or not the begging UPI code से लेके घूमेगा. Already have. Are you seriously? Beggars are roaming around. I have not yet seen, but have you seen? Seriously? Oh my God. Beggars are roaming with UPI code.
They have.
Right.
Yeah, I'm thinking we are beggars, not they are beggars. Seriously.
Beggars are roaming with UPI code. Oh my God. यही देखना था. Natural factors what? It could be anything like pandemic, earthquake, fire, flood, landslide. It destroyed, tsunami destroyed so many countries. Indonesia was devastated significantly. In India, Tamil Nadu was devastated significantly, but other states like Karnataka, like West Bengal, were not devastated. But Indonesia, the country, was devastated. Right. So, and population growth. Yes, population growth will also significantly. You see what has happened. Why India has become a every company in the world when it comes to e-commerce are eyeing India. Why? Because we are around 22% of the world population. We are 1/5 of the world. All right, 1/5 of the world. Can you imagine 22%? If even 50% or 30% of the Indian, forget about 50%, they start purchasing iPhone, they start to purchase on Amazon website. Can you imagine the amount of profit you are talking about? Significant. All right. So population growth also plays a very, very important role in the growth of a country. But yes, remember, too much of population growth will put a strain on the resources of the country. If the national income is increasing at a slower rate and population is increasing at a faster rate, then that is a bad situation for the economy. Per capita income is going to fall down. Average income is going to fall down. So what should be the ideal situation? The rate of national income should increase at a faster pace and the rate of population should increase at a slower pace. Clear hai? Now, this chapter is over. We'll start with the concept of national income. Right. Now, first of all, national income, this concept was given by Richard Stone and Simon Kuznets. Richard Stone and Simon Kuznets, for which they received the Nobel Prize. What is national income? National income is nothing but the aggregate output of any country during a given time period, that is 1 year. That is your national income. In case of India, national income is estimated by Central Statistical Office, compiled by Central Statistical Office, which is situated in New Delhi. We say that it is the most significant or most important macroeconomic aggregate because national income, it gives you the short-term performance of an economy because we are talking about 1 year of data. But if we look at the transition in the national income, then it will give us a long picture as well. All right, and national income is very important. What is the significance? Because it helps government decide what should be the economic policy. If the GDP rate is not increasing the way it should have, then government will have to change its budget. Government will have to change the outlook of the 5-year plan. It will give us the government an idea why the national income is not increasing, which sector is responsible. That's why we calculate national income according to sectoral performance. It means what is the total value addition done in the primary sector, secondary sector and tertiary sector. And then we'll find out that the problem is not with the secondary or tertiary sector. They are growing at, let's say, 10-11% rate of growth. The problem is with the primary sector. In the primary sector, agriculture is the sector that is retarding the process of growth, and it is growing at only rate of percent, which is 2%. So then the government will be able to take policy decision, farm waiver package, insurance for the farmers, this and that government can take, and government can try to revive the economy. All right. So it's important for the government. It's important for businesses as well. Because when you're talking about businesses, do you think any businessman will take the investment decision to invest into any country without looking back what was the transition in the national income? If suppose the national income is every year the GDP rate is going down, then Amazon, Flipkart, or your Amazon, Google, or these companies will never want to come to India. FDI will not come to India. But if the every year the rate of GDP is growing up, the past data, then that is very very important. You see, अभी तो YouTube में सबको वीडियो बनाने का ये एक कंपनी का प्रॉफिट बढ़ गया, आप इन्वेस्टमेंट कर लो इसमें. अरे, you are talking about 1 years of profit, 1 quarter of profit. You cannot. You have to look at past 10 years of data, at what rate it is increasing, what is the price to earning ratio, whether the stock is overvalued or undervalued. पेग रेशियो कैलकुलेट करने का आपको, देन यू कैन टेक ऑपरेटिंग प्रॉफिट कितना, ROCR, वो सब भूल गया. अभी वीडियो बनाने का ये खरीद लो 100 रुपए का 500 रुपए जाएगा, एंड देन यू सी व्हाट हैपेंस. ऑलराइट, इट इज सो. The thing is, if you have 1 year of national income data, you will not be able to do anything, because 1 year country can, even Uganda can grow at 8% of GDP at some point in time. But can we say Uganda is a very good country? Even a growing economy can grow at a 2% rate of GDP. But in the past, we have seen we have been growing at 10%. And we'll see that sometimes in the past, every 20 years, the Indian economy grows at 2% or 3% for a couple of years. It means this is normal. A pattern is repeated. So then the investment will be done in our country. Right now, the problem is there, but eventually the infrastructure in the country is increasing. People's level of education is increasing. The level of competitive, these are also important. When businesses want to invest in one country, they will also look at the level of competitive examination. That is, are you creating just the puppets, or are you creating a human workforce which are more skilled and employable in the long run? They will they will not just blindly think about investing into Indian economy. So they will want to look at all these factors. So national income aggregate data is very important for them. Not only that, a country is tagged as underdeveloped, developed, or developing according to the per capita income. Per capita income is nothing but the average income of citizens of the country, wherein we divide the total national income by the total population, or we also calculate sometimes per capita GDP, wherein GDP at market price we divide it by total population to get the value. So that will also tell us that what is the living standard of the people. Many a time government will have to contribute to the global bodies, World Bank, WTO, United Nations, as a percentage of GDP. That's why calculation of GDP is very, very again important. All right, inequality of income. Now, where in which sector inequality of income is more, there the government will try to promote more employment opportunities. You see, in almost every budget, government allocates more and more money to promote handloom, handicraft industry, small artisans, all its skill India program, this and that. क्यों करता है government? Because they know that these sectors are the Achilles heel for India. If these sectors are not performing good, then at what rate your GDP is growing, I mean, at what rate your industries are growing and your service sector is growing. But these sectors employ 30%, 20% of the population. If 20-30% of the population are living in abject poverty, then they will not be able to consume. And when consumption doesn't increase, the economy is not going to grow. And that's why the national income aggregate calculation and correctly calculating is very, very important. All right. So let's see here. All right. National income accounting is pioneered by Nobel Prize winning economists Simon Kuznets and Richard Stone. Sometimes they'll ask you this even. Net value of all economic goods and services produced within the domestic territory. National income accounts are fundamental aggregate statistics in macroeconomy. In India, CSO estimates national income. Signification: NI indicates national income, indicate the level of economic activity. It helps in evaluating short-run performance of the country. It enables businesses to forecast future demand for their products, helps to determine. If I tell you one thing, tell me, what is the future demand for electric vehicles in India? High or low? How do you say that? Because when you look around, government giving subsidies, all right, government giving subsidies on electric vehicles. Second, almost every big firm in India, whether it's TVS Motors, or it's Bajaj motorcycle, or it's Hero Motor Corp, these are three giants manufacturing motorcycles in India. They all have scaled up their production and spent billions of dollars to upgrade their factory to produce electric vehicles. Are they fools? They must have forecasted. उसके ऊपर अशोक लेलैंड भी है, और ओला इलेक्ट्रिक का तो भगवान भरोसे, क्या पता नहीं. Simple. I don't know why people have subscribed to the equity. Just euphoria is taking the price up. All right. Understand. Ola Electric will have to sell more number of vehicles than TVS and Bajaj Motors combined in 1 year in order to break even. बजाज क्या मूंगफली खा के बैठा है क्या? और हीरो मोटर्स कॉप, डू यू थिंक, और टीवीएस मोटर्स बिग कंपनी, आप लोग, आप छोटा एलईडी लाइट लेके हेलोजन बल्ब को दिखा रहा है मेरा लाइट बड़ा हो जाएगा. So I don't know. I'm just waiting when the price is going to crash. All right, and it is going to crash eventually. All right. So helps in determining the size of per capita income. Helps government to fix various sector specific development targets for different sectors. Help in assessing choosing economic policies. Throws light on income distribution and possible inequality. Useful to determine the share of nations' contributions to various international bodies. Provide guide to make policy and growth and inflation. And national income data can help economic forecasting and make projections. Now remember, there is what is known as United Nations System of National Account, UNSNA बोलता है. What is UNSNA? Simply I can explain you what is the purpose of accounting standard. The purpose of accounting standard is to create coherence. Otherwise, if every year the businesses are changing their method of recording the data, then their same data of the same company will not be comparable. I'll not be able to find out at what rate my economy is growing, my business is growing, because the data was calculated differently in the past and differently now. In the same way, my business will not be able to compare with other business. All right. So I cannot say whether I'm better than my competitor or not, because he is using different method of accounting, I'm using different method of accounting, our operating profit are different, maybe I'm incurring operating loss, but if the method is common, then I will he will also be, his operating profit will turn into operating loss, so comparable nahi hoga. In the same way, when every country is uh, one country is differently changing the methods of measuring national income, and any ad hoc method you apply, then your own data will not be comparable. So if you're saying that India is growing at 7%, but in the past that method of recording is different, in the current situation that it's different, then you cannot with certainty say that we have grown at 7%. In fact, we would have, growth might have come down, or we may have grown at 10% also. And moreover, your data will not be comparable with any other country's data as well. So that's why United Nations System of National Account creates a framework. All right. And when every country follows that framework, the same methods, the three methods that is mentioned by national, UNSNA, then not only a country's data will be comparable with another country data, but your data will be more reliable when you compare it in the with the past data. So you can get a real, data with regard to whether the GDP is growing, what you have projected at, what you have been projecting, or not. It is not growing at that projected rate. So it is very important. So UNSNA creates what is known as a production boundary. All right. And it says that every economic activity that comes within the production boundary should be added to the national income. And the method of addition of this product, activity, they've said that there are three methods of measuring national income. One is known as value added method, or production method, or industry of origin method, wherein we try to find out what is the value addition done in each sector. Another is expenditure method, and yet another is income method. So under the value added, now whichever method you follow, it does not matter. If you are not making mistake, then one method will provide a check over another, and each of this method will give you the same value, should give you the same value of national income. All right. So if suppose we are, I'll come to the method later on. What are the economic activities which are not included in the national income? They also ask you many a times. So remember, any economic activity which uh, any activity is not an economic activity from the perspective of national income when there is no quid pro quo, give and take nahi hua hai, right? For example, donation and charity. If I take a loan from a bank and repaying, the bank is charging me the interest, the bank is providing me services. All right. So added. But the thing is, if I am donating something to somebody, there is only debit from my side and credit from on your side. But you are not selling any goods. I'm not getting any good. So it's a one-way transaction. I'm paying, you're receiving, but I'm not getting anything back. Right. So as a result, it will not be considered as an economic activity. It is considered a transfer payment. So government payments towards subsidy, pension, unemployment allowances, all right, donations, these are never considered as a part of national income. These are transfer income, as we say. All right. Then when a machine is bought today and sold after it is fully depreciated at scrap value, if suppose I buy a machine worth rupees 10 crore, after 20 years, it is fully depreciated. I will sell it at, let's say, 5 lakh rupees machine को per kilogram हिसाब से iron का हिसाब से बेच दिया. Machine is useless, they will go and melt it and will get, so 5 lakh rupees I've got. Should it be added to national income? The answer is no. Why? Because this machine's value was 10 crore rupees when it was bought, and every year you provided depreciation, it was added to the GDP. Now 5 lakh rupees when you're added, wherein nothing new is produced. So it will artificially inflate the national income. That's why it is not added as a part of national income. All right, clear. If suppose a farmer is producing for self-consumption, it should be added to national income, but these goods are not sold in the market, so it doesn't command the market price. So, and it's not possible for the government to send employees to every household in the village and ask them to fill up a form how much of the goods you have produced and consume yourself, and at what date you have consumed. And let's say he says that on 10th of April I've consumed 10 kilograms of tomato, 20th of April I'll consume 5 kilograms of potato, self for production, for self consumption, I've produced, I've consumed it, and government will make a chart of it. Government will go crazy. Government have to employ half the population of the world of India to do it. So that is not a possibility, but it should be added, but it is not added. But if you are producing for self consumption in your household, you're making a tea for yourself, a coffee or a Maggie for yourself, it should not be added, because this is not attached to your livelihood. Any kind of windfall gain from investment into equity, when you purchase any equity for the first time, it was already added to the national income. With your money, the company bought assets and everything, expansion किया, promoter लेके नहीं भागा. तो अभी बायू का आईपीओ लेगा तो promoter लेके भाग जाएगा आपका पैसा. So now what happens now? Now the same share is being sold in the market. So one person holding 100 shares of a company sells 100 shares, somebody will get that and then they will sell to somebody else. It means the same 100 share is changing hand 1000 times in a day. So 1000 into 100 into multiplied by the market price, even Ola will beat Reliance Industries. So it should not be added to the national income. Investment in stocks, bonds in the secondary market should not be. Windfall gain should not be added. Why? Lottery win kiya, aap kya kiya? What have you done? Whatever you have bought, the lottery price ticket, 10 rupees mein hum kharida lottery ticket, okay. But after that you got 30 crore rupees as winning lottery, then it should not be added to the national income. That is also important. Is smuggling and gambling activities? No, it should not be added. Though even though it affects the national income, it generates employment, but still it should not be added to the national income because these are illegal activities. All right. So these are the things that, and of course, carry forward of stock. When you carry forward stock from this year to next year or one balance sheet to another, it was already shown as in the previous balance sheet as opening stock, which is now shown as a closing stock, which is now shown as an opening stock in the trading account. So you are not going to add it again. And finally, only the value addition is taken. If I have purchased sugar worth rupees 50. All right. And other things also, total purchase is 150 rupees. And I made a cake of it. And the value of the cake is rupees 550. But don't you think this sugar and cream and everything is included in this? So after purchasing the raw material, I'm selling the cake at 550. So what is the value addition? Is the value addition 550 or is the value addition 400? So value addition is what is the value of output? This is the value of output. From the output you deduct intermediate consumption and you will get the value addition. All right. So other technical parts of it we will see after the break. 1 o'clock will begin. Huh? What? 1 o'clock. Yeah. No, everybody is listening 1 o'clock. Huh? Acha, you'll come little late. Okay.
I will have this start only at
Okay. Okay.
listen in you.
All right.
పోతే మీరు కొంచెం ఎక్కువ పెడతారా మీరు తిని తర్వాత లేట్ అవుతుంది అందుకే అన్ని తిని తర్వాత ఒలిగే చేసి తెలుగులో ఒకటే రెండు లేకపోతే రైస్ అన్ని మేము చేసి బాక్స్ లో రైస్ వేసుకుంటాం నా బాక్స్ అక్కడే ఉంది ఏమేమి చేసినా అది పైన ప్లేట్లు కూడా పెట్టాను బాక్స్ లో రైస్ ఇది పెట్టేసాను 3 o'clock బ్రేక్ ఏం కలపండి ఇలా అలాగే అలా ఎక్స్ట్రా పంజాబీ CA boys in the they got English so good like and influence. Yeah, love it. ಅಲ್ಲಿ ಕೇಳ್ತಾನೆ ಇಲ್ಲ ನಂಗಿದು ಅನ್ಕೊಂಡು ಪಕ್ಷ and people ask me why are you doing This is now going it's word is part. All English Okay, sorry.
There is congestion in this road. A big truck has come. You are a part of that group, no? Where, acha, you are here only. You said you'll go.
No, sir. But
Online students, am I clearly audible? Please hold on.
ऑन नहीं हो रहा सर टाइम ऑटोमेटिक ऑफ हो जाए
All right. Macro, they will ask direct question. Yes, dear. Both direct and indirect question, numerical based question, they will also ask in macro. All right. So let's continue. Now here is given different concepts of national income. You see, UN system of national account developed by United Nations. SNA provides comprehensive conceptual and accounting framework for compiling and reporting macroeconomic statistic for analyzing and evaluating the performance of the economy. Now, national income accounting has three sides: product side, expenditure side, and income side. Value must be the same from every method. Production method measure value added. Expenditure side looks at the final sales of goods and services, and income side measures the distribution of proceeds from sales of different productions. Feel easy here. Now, when we talk about GDP, remember GDP is always measured at market price. So that's why we denote GDP. We denote GDP at market price. So what is GDP? GDP is the market value of all final goods and services produced within the domestic territory in one accounting year. Now, whoever is producing it does not matter whether it's a foreign entity or a domestic entity, a foreign national or an Indian national. If the activity is happening within our domestic territory, whatever the goods are produced, we will multiply the market value of this particular goods into the number of units sold that will be added to the GDP. Now, when we calculate GDP at market price and we are applying value added method, so we say that value added is nothing but from the value of output, we have to deduct intermediate consumption. All right. Let's say, for example, if this shirt is sold in the market at, let's say, 2000 rupees, what is that is the value of output, not value addition. It means somebody must have bought the raw material. They have incurred another cost like machinery cost, electricity cost, labor cost, everything added together. So they must have incurred 1500 rupees to purchase the raw material. And that 1500 rupees of raw material was converted into a shirt which is sold in the market at 2000 rupees. So the value of output is 2000, correct? Rupees 2000. But what is the intermediate consumption? Intermediate good, that is rupees 1500. So what is the total value added? Total value added is only 500 rupees. So in the hand of the consumer, the goods will be sold at 2000 rupees. All right, that is the value of output. That is not that value addition. Value addition we will get only when you deduct from the total value of output the intermediate consumption. What will happen if I take the total value of output and intermediate consumption together? Don't you think the shirt will look like it is 3500 rupees ka total value of output? Don't you think it will lead to double counting? That is the biggest problem in estimating national income. All right, now let's take a look here. GDP at market price is nothing but value of output in domestic territory minus value of intermediate consumption. That is your value added. Now, important points to be kept in mind. Whatever has been mentioned by you and SNA, what should not be taken. Value added is the difference between value of output and purchase of intermediate goods. Sometimes a direct question is asked from here. What is value added? Which of the following correctly represents the definition of value addition? Intermediate consumption consists of value of output and services consumed by inputs as inputs in the process of production. GDP covers all production activities organized by system of national account, that is known as production boundary. So every activity that comes within the production boundary will be added as a part of the national income. The production boundary covers of almost all goods and services classified in the national industrial classification. Non-economic activities, mind it, non-economic activities are never accounted for in the national income. It is never accounted for. Just stuck. Just hold on. Right. Is never accounted for in the national income. Where was it? Okay. Never accounted for in the national income. National income is a flow measure. Now, what is a stock and flow measure? National income, when the government tells you that GDP has grown at 6%. Now, what is the meaning of this 6%? It means compared to the base year, this year we have added 6% more in terms of total value of goods and services produced. So that's why it's a flow measure, because it includes only those goods and services which are produced in the current period. Two types of goods are used in the production counted. Remember, when you do your accounting, the costs are divided into 4 different types. What are these costs? Capital cost, then revenue cost, current cost, indirect cost and direct cost. The concept of indirect and direct cost do not exist in national income. Only we take current cost and capital. All right, capital cost and current expenditure. So two types of goods are taken, namely capital goods, that is business plant, equipment purchase, and inventory investment, that is your current cost. Nominal versus real GDP, that is very, very important. They keep asking the question, what is the difference between nominal and real? You see, national income, how do we measure? We take any particular year as a base year. All right. Let's say if I take 2014 and 15 financial year as the base year, then we will compare 2000, let's say 18 and 19, or let's say we will compare 2016 and 17, and then we'll compare 2017 and 18 financial year. All right, if in the base year, whatever is the total value of output, let's say we are GDP, the total value of goods and services produced was rupees 100, correct? If suppose there is, we add 110 rupees worth of goods and services in 2017, 16 and 17. It means we can say that the growth in the GDP rate is by 10%. But if we here add, let's say rupees 112, then we don't compare it with this. We will again compare it with the base year. It means the growth rate is 12%. It means rate of growth is increasing at an increasing rate. We are in the expansionary phase, right? But what happens here, that with growth inflation also comes. And how do we measure inflation? We take the basket of commodities in the particular base year and we calculate what is known as weighted average price index. And we'll take the same basket of commodities in the current year, all right, and we will again calculate weighted average price index. If we find out that these goods could have been purchased at rupees 100, now to purchase the same goods I have to incur 112 rupees, all right. It means again, is it growth or is it inflation? You have to figure out, because national current level may denote a GDP that includes the effect of inflation as well. So we distinguish between base year and the current year. Base year price, if we calculate the GDP, we call it real GDP. That will not include the effect of inflation, whereas the current year is known as nominal GDP, wherein which will include the rate of inflation. So the difference between the base year and the current year, that is the difference between the real GDP and nominal GDP, is due to the rate of inflation. Now, what happens here is that, tell me, if we are calculating GDP, GDP definition says what? Market value of all goods and services produced within the domestic territory in 1 year. If suppose I have produced 100 units of the good and I was selling at a market price of rupees 20. So can we say that from my end, from one of the businesses end, rupees 2000 should be added to the GDP? Now, after some time, things become expensive. Labor cost increases, carriage cost increases, could be anything. And to produce the same quantity, my cost of production increases. Now, when my cost of production is increasing, can I afford to sell at the same market price? No, I will have to sell at a higher market price. Now I'm selling at 2500, 25 rupees, all right, but I'm selling the same quantity. So now it is 2500. Now tell me one thing, if I measure the GDP here, it shows 2000 and GDP suddenly increases by 500. But is it the real increase? Real increase would have been if I would have increased the level of output, due to which this value would have been higher. But my output is same. It means neither I am increasing the purchase quantity of raw material, neither my machine are consuming relatively more electricity, nor I am needing more labor, neither any carriage inward more, but I am paying more for the same thing. I'm paying more for the same thing. As a result, the value of the market value of goods and services produced is higher. So this is not a real growth, right? So when it will show a distorted picture, that's why we have to estimate national income at the base year, GDP at the base year, and then GDP at the current year to find out what is the price level. So bigger the rate of inflation, more will be the divergence between the nominal income, nominal GDP and the real GDP, and lower the inflation, less will be the divergence. If there is no inflation, hypothetical situation, all right, as I say, always say that there could be a possibility God does not exist, but inflation does not exist, not possible. Inflation will happen. So if inflation is there, inflation is not there, let's say hypothetically, then there'll be no difference between real and nominal GDP. Now, in order to deflate the nominal GDP to the real GDP, we have to take the inflation out of the nominal GDP. So we use what is known as GDP deflator. GDP deflator. Now, what is GDP deflator? GDP deflator is nothing but the price index or the price level. That is the rate of inflation only. All right. We use the GDP deflator to deflate the nominal GDP and arrive at the real GDP. Clear? So let's take a look here. You will definitely get questions from there here. So today I'll be sharing this one with you guys. GDP, which is measured at market price, is sensitive to changes in the average price level. That means inflation. The same physical output will correspond to a different GDP level if the average level of the market price changes. It means what? It means if there is an increase in the rate of inflation, then the same physical level will give you the higher value of the output. If the price rises, GDP measured at market price will also rise without any real increase in physical output, which is misleading. It shows that GDP is increasing, but where is GDP is increasing? All right. GDP at constant prices, that is real GDP, is the value of domestic product in terms of constant prices of a chosen base year. And in case of GDP at constant prices, GDP will change only when there has been change in the physical output. All right. So from here, they may ask you to calculate what is known as GDP deflator. All right. So you see, real GDP, GDP deflator का क्या है value? Real GDP is that is equals to nominal GDP by GDP deflator into 100. Nominal GDP by real GDP, nominal GDP by GDP deflator into 100. So it means simply understand this fact. You don't have to rote learn the formula. If suppose and GDP deflator has a base of 100, base of 100 always. It means if the deflator value is 100, you're getting, it means there is no inflation. If the deflator value is 120, it means the rate of inflation is 20%. If the deflator value is 90, it means inflation has come down. It is a negative inflation. It means real GDP will be more than the nominal GDP. So if suppose if I say that real GDP is worth 1000 and deflator is, let's say, 110, it means can I assume 10% is the rate of inflation? And if I ask you what will be the nominal income, so what will I have to do? That is 1000 into 110%. So what I'm doing here, this is your real GDP, 110%, it means into 10 by 100. All right, 10 by 100, that will give you what? The nominal GDP. Correct. That will give you the nominal GDP. So what I'm doing here, real GDP को मैं GDP deflator से multiply कर रहा है कि नहीं? Correct. Into 110 by 100. So into 10 by 100 किया, that is 110, sorry, 110 by 100. So 110 is what? GDP deflator. So can I say that nominal GDP is real GDP into GDP deflator equals to your divided by 100 is your nominal GDP. अगर ये फॉर्मूला आपको पता है, then linear equation से आप कोई भी फॉर्मूला निकाल सकता है. Right? Clear? Now let me take you some of the sums here. You see here, what they have shown here is that small question they may ask you here. What they have shown here, this is the nominal GDP, this is the real GDP and GDP deflator. And I've asked you to interpret it. Simply dekho, when nominal GDP and real GDP are same, deflator value is 100, it means there is no inflation. Correct? Now here nominal GDP is higher, real GDP is more. Correct? So it means there is positive inflation. And how did I get 123 here? So 800 by 650, because if you do 650 by 800, you will get a lower value than 100. Correct? So which to divide with what is easy to figure out. If nominal is more than real, it means there is inflation. It means deflator value should be greater than 100. So it means we have to divide the higher value with the lower value. So when you divide 800 by 650 and multiply by 100, you will get 123.08. It means the rate of inflation is 23.08%. Here also same, if I take this one value, you see again nominal is more, real is less. So it means 1150 by 1190 into 100, you'll get 130.25. It means 30.25 is the inflation. But if suppose in 2020, if I write here nominal GDP is 1800 and let's say real GDP is 2000. Now real is more than nominal. Inflation उठा या inflation घटा? Inflation decrease हुआ. So it means you should get a value which is lower than 100. Will I get the value if I divide 800 by 2000 or 2000 by 800, 1800? 2000 by 1800, we cannot do it. You will get the value more than 100. We have to do what? 1800 by 2000 into 100. So what value are you getting?
9%.
So it means you are getting lesser than value. It means by that margin the inflation has come down. Correct or not? Right. Next problem देखो यहाँ. The nominal and real GDP of a country in a year. This is your nominal and this is your real. So real is again more than nominal. And if I ask you GDP deflator, so real is more. It means what you have to do? 3000 by 4700 into 100. How much value you get? 60.8382. Okay. It means lower inflation. Here you see simple, they've given nominal GDP if real GDP. You have to find out nominal GDP. Real GDP is 450 and price index is 120. It means what is the rate of inflation? Rate of inflation is 20%. Correct. And they've given you find nominal GDP. So it means 450 into 120% kar do सीधा ना. Correct. 4. So that's what they've done. 120 by 100 is nothing but 120%. Alright.
Yeah.
Next, you see, suppose nominal GDP of a country in a given year is 600 and the price index given in 2010 is 100. Let's say is 2010 and then 2018. So they've given first of all nominal GDP, NGDP लिखते हैं and RGDP, real GDP and deflator. So nominal GDP is 600, price index given is 100, and real GDP will be same. No, there is no inflation, so 600. And they said that now let the nominal GDP increase to 1200. So 1200 is the nominal GDP and in 2018, and price index increases to 110%. So 110, sorry. So it means 10% is the rate of inflation. So don't you think, understand, this nominal GDP is 10% more. इससे 10% निकाल देगा तो आपका real GDP आ जाएगा. So 1200 divided by 110 into 100, you do it. How much? 1090.9. So that is the value they have given. Simply formula आपको याद करने का जरूरत नहीं. Correct? Simple. No? If I tell you, you have paid 1000 rupees, including a GST of 18%. It means in this 1000 rupees GST is 18 added. Then this 1000 ka, what is the real value if I want to find out? 1000 divided, what you have to do? Divided by 118 into 100 करेगा. तो आपका actual value without GST, will you get it or not? Alright. So in the same way, what they have said is that nominal GDP is 1200 and deflator is 110. It means this 1200 includes 10% extra. GST बोल दो. So without GST, what is the value? Real. So you take out this. It means what I've done is 1200 divided by 110 into 100. Correct? Now you see here, gross national product is a measure of market value of all goods and services. Now here the concept of NFIA comes. What is NFIA? So NFIA is not export or import, that is net factor income from abroad. Net factor income from abroad. What does it mean, net factor income from abroad? We have to balance out what is earned by Indian companies and Indian citizens abroad with respect to what is earned by foreign companies and foreign citizens in India. So when we calculate GDP, we include every economic activity that has happened within the domestic territory. All right. So if we are calculating GDP or NDP, all right, here we are talking about domestic, and on the other side, GDP may become GNP and NDP may become NNP. All right. It means we are talking about what? We are talking about national. So in case of GDP, we take every economic activity, that is whether it is performed by anybody, even if an alien comes from another planet and does economic activity in our domestic geographical territory, it will be added to our GDP. It means we will add income earned by Indians. Let's say if I take Indian citizens, we will also add income earned by, of course, Indian businesses. Sole provider भी आता है, company we cannot write every business. All right. We can also add income of earned by foreign citizens, and we will also add income earned by foreign business, of course operating in India. So it means whoever performs any economic activity within our domestic territory should be added to our GDP. But what should we exclude? We should exclude income earned by our companies but not in India, abroad. So we will exclude what? We will exclude Indians earned abroad, and of course we'll deduct Indian companies or businesses earned abroad. All right. So here the concern is not the ownership. In case of domestic, remember the concern is not the ownership. The concern is where it happens. If it happens on our land, it is mine. Who does it? It doesn't matter. In case of national, where it happens is not the concern. Who does it is the concern. So in case of national, what is ours will add, what is not ours will deduct. Wherever it happens, it does not matter. So income earned by Indian citizens is ours, we'll add. Income earned by Indian businesses, wherever it happens, doesn't matter, we'll add. Foreign citizens is not ours, so deduct. Foreign businesses not ours, will deduct. But Indian businesses abroad is ours, will add. And Indian businesses, again ours, we add. Indian citizens and Indian businesses. So when I make this adjustment, then what I'll get is net factor income from abroad. So if suppose Indian companies and Indian citizens earn more outside than foreign companies and foreign citizens in India, then we'll get a positive NFIA. And when you get a positive NFIA, then national will be higher than domestic. It means GNP will be greater than GDP or NNP will be greater than NDP. But if it's vice versa, it means foreign companies earn more in India, foreign citizens earn more in India relative to the Indian citizens and Indian companies businesses abroad. Then you have a negative NFIA, and in which case GDP will be greater than GNP and NDP will be greater than NNP. So when we make this adjustment, we turn the GDP into GNP. It means if I want to calculate GDP GNP at market price, then from the GDP at market price we have to add NFIA. And conversely, if I want to calculate GDP, then you have to deduct NFIA. And if I want to likewise, if I want to calculate NNP at market price from net domestic product at market price, then I have to again add NFIA. Clear hai? This adjustment will turn domestic into national. Clear hai? Now, NFIA is difference between aggregate amount that a country citizen and companies earn abroad and the aggregate amount that a foreign citizens overseas companies earn in that country. If net factor income from abroad is positive, GNP would be greater than GDP. The distinction between national and domestic is known as net factor income from abroad. So national क्या है? Domestic plus net factor income from abroad. All right. GNP includes earnings of Indian corporation overseas and Indian residents working overseas, but GDP does not include. GDP excludes net factor income from abroad. Now net domestic product. So understand here, depreciation in national income, we call it as consumption of fixed capital. Depreciation is consumption of fixed capital. You bought a machinery, the value of the machinery is 10 crore. You are going to use it for 10 years. Every year you are going to provide a depreciation of 1 crore rupees. So that it means you have consumed 1 crore worth of the machinery when you are converting your purchase and opening stock into the finished product that you are able to sell. All right, clear. So it means if I want to find out gross domestic product, let's say, and here net domestic product, the difference between gross and net is due to depreciation. It means if I want to find out what is net domestic product at market price or factor cost, doesn't matter, then from the gross domestic product you have to deduct depreciation. All right, from the gross domestic product you have to deduct depreciation. So if you are calculating net domestic gross domestic product, it means you have to add depreciation back. Clear hai ye? So next brings us to the concept of what is known as market price and factor cost. Remember, GDP is always measured at market price, and most of the numericals you have to calculate initially GDP at market price and then GDP at market price. If it's given, then you have to begin your process from there only. So now when I say market price, it consists of many things. When you are paying for any commodity, what you are paying for? You are paying for cost of production. You are paying for the profit margin to the seller. Correct? Profit is also a part of value addition. And what you are paying taxes. That is your indirect taxes. All right. Combining all three is the market price. But sometimes on certain commodities, government also gives you subsidies. Subsidy. Now, all these three things, if this increases, this increases, the market price will increase. Market price will increase. But if subsidy increases, then market price will decrease. Subsidy is a benefit given by the government for consumption of certain necessary goods, or it could be anything. So that will lead to decrease in the market price of the product. All right. So the market price will increase by the amount of indirect taxes. So we will add indirect taxes when we are calculating GDP at market price. But it will get deducted. It will reduce by the amount of subsidies given by the government. So I have to deduct subsidy. When I do this adjustment, that is, if I'm adding indirect taxes and I am deducting subsidy, then this adjustment is known as net indirect taxes. So if I want to calculate the market price from the factor cost, it means to the factor cost I have to add net IDT. It means to the factor cost I have to add IDT and deduct subsidies. So it means if I want to calculate GDP at market price, then to the GDP at factor cost I have to add net IDT, that is GDP at factor cost plus IDT minus subsidy. That will give you the value of GDP at market price. All right, clear. So this is clearly shown over here. Depreciation we have seen. Net domestic product at market price is a measure of the market value of all final goods and services produced within the domestic territory of a country by normal citizens and non-residents during an accounting year, less depreciation. The portion of capital stock used up in the process of production or depreciation must be subtracted from final sale, because depreciation represents capital consumption and therefore a cost of production. So NDP at market price, GDP at market price minus depreciation, or you can say NDP at market price is NNP at market price minus net factor income from abroad. All right. So now Factor cost you see here. Yes, you see here. An example is given. If the factor cost of a unit of good is rupees 50, indirect tax is rupees 15 per unit, and the government gives a subsidy of rupees 10, then the market price will be rupees 55. That is 50 plus 15 minus 10. So market price is factor cost plus net indirect taxes. That is factor cost plus indirect taxes minus subsidy. Clear? And factor cost is market price minus net indirect taxes. So you see here. Now this comes a question here, that gross domestic product at factor cost, what can be written is, let's see, when I have produced this pen, I must have incurred some amount of cost. The expenditure I've incurred must have become somebody's income. So it means I must have incurred some labor cost, rental cost, interest cost, everything. Correct? I have to pay as compensation to employees. Mixed income of self-employed. It means some many professionals are also producing services. You all will become CA. So you can choose, rather than to work for a big firm, you start your own firm, your own practice. So you will be considered as self-employed professional, and your income earned will be added by the CSO under mixed income from self-employed. And of course, when we are calculating GDP, you have to add the depreciation. It means when we have to calculate from this perspective, so we have to add compensation to given to employees plus operating surplus, that is rent plus interest plus profit part, plus mixed income of self-employed, and plus depreciation, that will give us the value of GDP at factor cost. Also, all right. And if I add here, if I add here net indirect taxes, then it will become what? Then it net indirect taxes, then it will become market price as well. All right. Same way here, depreciation is missing. So it means if I don't take depreciation here, then you'll get NDP at factor cost. All right. Now remember, I've told you golden rule याद है ना? क्या golden rule था? All right, simple, that if you don't have to remember the equation, you have, if you want to find out the difference between net and difference between gross, the difference between net and gross is due to depreciation. When you are calculating net, you have to deduct depreciation. When you're calculating gross, you have to add depreciation. Likewise, difference between national and domestic is NFIA. When you are calculating national, you have to add NFIA, and when you are calculating domestic, then you have to deduct NFIA. And third one, difference between market price and factor cost. Factor cost is net IDT. So when you are calculating market price, you have to add IDT. It means you have to add net IDT. Net IDT. It means you have to add IDT and you have to deduct subsidy. And when you are calculating factor cost, you have to deduct net IDT. It means you have to deduct IDT and add subsidy. So all you need to do is find out what is difference on the two side of the equation. If suppose I write GDP at market price equals to GDP at factor cost, then what will come? If I write GNP at factor cost equals to NDP at factor cost, then what will happen? If I write here NNP at factor cost and write here NDP at market price, what will happen? If I write here NNP at factor cost and GDP at market price, what will happen? All you need to do is find out what is different on both sides of the equation. Here gross and gross is same, it means depreciation is gone. Domestic and domestic is same, NFIA is gone. What is different? Market price and factor cost. We are calculating market price, so we have to add net IDT. Again, here factor cost is same. If one side factor cost, other side market price, or vice versa, it means net indirect taxes we have to take care of. Here difference is क्या? Gross है और net है. You are calculating what? Gross. तो पहले क्या करेगा? add करेगा depreciation, and then net and net and domestic है, you are calculating, sorry, gross national and domestic, you are calculating national. So national में क्या करेगा, NFIA add करेगा, easy. All right, here again net and net is same, so it means what is gone, depreciation is gone. Here national and domestic का difference है, and you are calculating national, so you have to add NFIA. And what is the other part different, factor cost and market price है, you are calculating factor cost, it means you have to deduct net IDT. And here everything is different, so net and gross you are calculating net, so you have to deduct depreciation. National and domestic you are calculating national, add NFIA. And factor cost and market price you are calculating factor cost minus net IDT. So if you know this, you never have to learn or by heart any kind of equation. So now let's come down, per capita income. So understand, per capita income, it could be per capita GDP, it could be per capita national income. If they say per capita national income is always measured at NNP at factor cost. Now why we don't measure at market price? Because you see, if we measure at market price, then government will increase the tax and market price will increase. Should I say national income is rising just because government has increased the tax? If government tomorrow says that on every car I will not take 28% GST but I'll take 50% GST, let's say hypothetically, so don't you think the price of every car is going to increase by 22%? Correct? So can I say that our country is growing? The answer is no. All right, and that's why we don't take market price. Then you say, sir, if you're taking at factor cost, then subsidy will be added, so that will also inflate. You tell me logically, dear, on how many items that the government gives subsidy, as opposed to what is the percentage of total goods and services on government on which the government takes tax. Government takes tax on 99.8 or 99.7% of the things. But do you think government gives subsidies on everything? No. So subsidies will never inflate national income because subsidy is only given for necessary goods and very small amount of subsidies are given. All right, clear. So that's why we always measure national income at factor cost. So when we want to find out per capita income, then per capita national income is the mention, then national income NNP at factor cost divided by total population, and per capita GDP is GDP at market price. GDP always comes at market price divided by total population. Now there comes a concept between personal income and national income. Now remember, national income is not only calculated on receipt basis but also on accrual basis. Realization basis पे भी होता है, accrual basis पे होता है. But personal income is only determined in terms of realization basis. So national income is anything that we have earned. Whether we have received or not, that is not our concern. Whereas personal income is whatever we have received, whether we have earned or not, that is not our concern. So national income will include all those income that we have earned. Earned ka matlab, it means I've done something for it. I've sold goods, I've produced something, I've worked somewhere, salary I've received, revenue I have earned. So earned mein, it means whatever you are doing, you are earning some money from it, that will be added to the national income. Then national income earned but not yet received. Now what is that earned but not yet received? Contribution to the public provident fund. You have earned it but you have not yet received it. All right. Unclaimed dividend. The company has said that I will distribute dividend, but the dividend is still not been earned, so that is also income earned but not yet received. That will also be added. Then what is income received but not earned? Anything that you are getting without any quid pro quo. It means there is no give and take. Donation, charities, allowances, pension, everything that the government gives you for free. Donation, charity, or even if you get from somewhere else, doesn't matter. So that will be your considered as transfer income. Income received but not earned. It should not be included in national income. Why it should not be included? Because there has no economic activity been performed. According to United Nations SNA System of National Account, any activity which is located outside the production boundary which is not not determined or not recognized by the National Industrial Classification NIC, will not be added to the national income. So we will not add. But personal income and private income both will include every type of income that you received, all right, that you have received, whether you have earned or not. आपको receive करने मांगता. So it means salary I have earned and received. National income also, personal income also. All right. If I say national income and or compensation like here, so it means if I want a national income, ये reconnection हो रहा है. Online students, are you able to clearly hear me? Please reply. All right. Anyways, so we uploaded. So personal. Now within the national income, you have income of the government. So we have government's income and we have income of the private sector. So income of private sector, and income of the private sector also include personal income of the household. So if I want to calculate income of the private sector, then from the national income, don't you think I have to deduct government income? Once I deduct government income, now I will get income of the private sector, not completely, because national income does not include what? Income received but not earned. So I have to add here income received but not earned. So from the national income, I deduct, from the national income, I subtract every income, and then to that, I will add the transfer income, that is income received but not earned. That will give me the income of the private sector. Now, not completely. Income of the private sector आ गया. अब income of the household लाने का मेरे को. Now, to get the income of the household, what I have to do? That is your personal income from the private income of the private sector. I have to deduct what doesn't go to the household. What doesn't go to the household? Corporate income tax doesn't go to the household. Corporate income tax. What else doesn't go to the household? Undistributed dividend, retained earning, that doesn't go to the household. I have to deduct that undistributed dividend or retained earning, that will not go to the household. And then whatever is left is income of the household or personal income. From that personal income, if I deduct income tax, that will give us the personal disposable income. So पहले government national income, so you deduct all government income and add all transfer income, whether it has been received within the country or received from outside the country, and any kind of transfer income that is paid by our country to somebody, that will be deducted. All right. And then we have to add what is known as interest on national debt. Now, what is interest on national debt? This is also a transfer income. When the government needs money, government is going through deficit, then government borrows from the domestic territory and from international institution as well. Let's say government is borrowing. Why do we call it national debt? You will understand, because the burden of repayment of the interest falls on the 12. Well, sir, how is it possible? If I'm buying government bond, I should get the interest. Why the interest burden? How the is going to come to me? You will get to know. If it doesn't come to you, it will go to somebody else. It means public का part में ही जाएगा. So 8% interest for 2 years time or 3 years or 5 years time. Every year you receive this interest or cumulative interest you will receive. When the time will come for redemption of the bond, what will I do? In that case, government will neither decrease its government expenditure nor increase the additional issue another bond. All right. And when those bonds are purchased, done, it means the payment towards your principal and interest is not made by the government. It is made by somebody else who is purchasing the bond. So if I remove the government from the equation, can I say that people are lending and borrowing among themselves? But will say, sir, फिर हम तो खुद में कर सकते हैं. Government का क्यों है? Government creates liability. Because other guy who can borrow from you and run away, आप किसको पकड़ेगा? Government cannot run away. So this not running away, for that the government here, this is interest that you're getting is for the safety, that is the government says मैं नहीं भागेगा इसीलिए आपको इतना interest देना पड़ेगा. So interest on national debt has to be added, all right, because this is transfer income, and then we will arrive at what is known as personal income of the household. Let's see here. Personal income is the income received by the household sector, including non-profit institutions serving household. It is income actually earned. All right. So not necessarily, it means received but not earned. Example of this include transfer income such as social security benefits, unemployment compensation, welfare payment, etc. Individuals also contribute income which do not actually receive. For example, undistributed corporate profits and contribution to employees' social security, this and that. So personal income is national income plus income received but not earned minus income earned but not received. Simply that I've already given you in the classroom. Same thing. Disposable personal income यहाँ से minus कर देगा. So you see, if I want to calculate private income, is a measure of income both plus net factor income from abroad. NFIA में add कर दिया. Alright. Plus national debt, interest on national debt, current transfer from government and other transfer from the rest of the world. That will give you the private income. So here the sums are given, and you see which is the sum number 5. So if we go to question number 5, so what they've asked you to, from the following data, calculate NNP at factor cost, NNP at market price, GDP, GNP at market price, and GDP at market price. So remember one thing here, whenever they ask you a question like this, when you have to calculate everything, then you begin from GDP at market price and try to arrive at NNP at factor cost. So what you have to do, आपको gross, once you find out gross domestic product, then from the gross you convert to the net. So you have to deduct depreciation. When you deduct depreciation, this will become gross domestic product से net domestic product at factor cost, it will become. Then you will do what? You will convert domestic to national. It means you will add NFIA. So when you do that, it will become NDP at factor cost to net national, net domestic product factor cost to net national product at factor cost, correct? And then you have to convert market price to factor cost. So to convert market price to factor cost, what you have to do? You have to deduct net IDT. When you deduct net IDT, then it will become what? It means you have to deduct IDT and add subsidies. Then it will become, यहाँ पे NNP at factor cost नहीं होगा, NFIA किया, NDP at market price होगा, at market price, and then it will finally become NNP at factor cost. Now it doesn't matter you take care of depreciation first or NFIA first or net indirect tax, because you are deducting the same values, no? So in this question, what they have done, they have found out GDP at market price का क्या फॉर्मूला था. यहां पर आप देखेगा तो mixed income of self-employed we will add. If we are adding this, rent profit are a part of operating surplus, so you will not add this because these values are included in this value. And then compensation to employees you have to add. Market price कर रहा है तो net indirect taxes also you have to add, and then depreciation. So when you do that, you see compensation to employees, operating surplus, mixed income, consumption of fixed capital, net tariff. So you got 4950 as the GDP at market price. Now from the GDP at market price, what value did you get? You get 4950. So 4950 से GDP at market price is 4950. So it means what you have to do now, you want to get GDP at market price to NNP at factor cost. So first आपको GNP at market price लाने के लिए क्या करना पड़ेगा? To get this, it means from this 4950 you have to NFIA कितना दिया? -50. It means you have to minus it now. Plus of -50, it means it will become what? 4900. Then from gross national product, you have to convert to net national product. It means you have to deduct depreciation. Where is depreciation? Kahan gaya? 400. So it means it will become 4 4 sorry 4 4500. And then you have to net indirect taxes, you have to deduct. Then 4454 4500 है ना, 4500 से 450, so it will become 4050. That will be your final answer. Clear है? Simple. Next income, next one they've asked you to calculate personal income and private income. Personal income bola, but we calculate private income. Again, you see they've given you what? NNP at market price. So first you have to convert it to NNP at factor cost. So NNP at factor cost करने के लिए क्या करेगा मैं? Minus net IDT. Correct? So net IDT किधर है? Yeah. It means I have to deduct 175 and add 30 rupees. How much it will become? 1746 it becomes. Now what we have to do from this, I have to deduct everything that is a government expenditure, government income. So government income क्या है? सबको minus कर दो आप. So income of property accruing to the government administrative department, this minus. All right. Then saving of non-department enterprise, that is also government, minus. Interest on national debt, you have to add. Current transfer from the government, add. Current transfer from the rest of the world, add. Saving of the corporate sector, then you have to saving of the corporate sector. If you're calculating now, this will up till now this will give us our private income. यहाँ तक private income आ गया. Now personal income, if you have to calculate, then saving of the private sector we have to deduct, and corporate profit tax, it means corporate tax, you have to deduct. When you do this, you will get the value. See, that is your 1711. Clear hai? Right. So very similar problems are given here. Same way here, you see, calculate aggregate value of depreciation. Now missing figure problem hai. Aggregate value. So what I'll do here, everything is explained. I've already shared the PDF handouts with you guys. You will do it. This is very, very easy. All right. I've shared this PDF. Haven't I? ये share किया ना मैं? How is it you didn't get it? You're not in the group. All right. So if again I'll share for everybody. Sir, there is a continuous lag in the video. Please sort it out. Continuous lag. Oh, yeah, problem hai. Just hold on. I'll sort it out, dear. Just hold on. I'll call the guy. Relax for 2 minutes. Just hold the guy. Thank you, guys.
ಬ್ರೇಕ್ ಕೊಟ್ಟಿದ್ದಾರೆ ಇವಾಗ.
क्या हो गया था मधु? अशफत बोला था वहां, पता नहीं।
चल रहा है सर, वो नेट नहीं चल रहा बोला, नेट तो चल रहा है, चेक किया। और
नहीं,
क्या
बट
प्रॉब्लम?
बार बार ये डिस्कनेक्ट हो रहा है। तो छोड़, अभी 3 बजे का होगा ब्रेक, तब ठीक कर देना एक बार।
हाँ सर।
So I'll share it with you guys. So now in this particular question, you have to find out the value of depreciation when GDP at market price is given. Now GDP at market price, GDP at MP is 1100 crore. Right. NFIA is given 100. NFIA is 100 crore. Indirect taxes minus subsidies. It means net IDT. They've given as 150 crore. And national income. It means NNP at factor cost is given as 850 crore. Now you have to find out depreciation. Now tell me what is the difference between GDP at market price and NDP at market price? That is depreciation. All right. And what is the difference between GNP at market price and NNP at market price? If I ask you, one side you have GNP at market price and you have, or let's say, factor cost, and one side you have NNP at factor cost. What is the difference? Factor cost is gone. Net IDT कुछ नहीं करने का. National is gone. NFIA नहीं करने का. Difference is gross and national. It means if I can calculate GNP at factor cost, then the difference between this and this value, that is 850 value, will give me the value of depreciation. Correct? So to calculate GNP at factor cost, GNP at market, GDP at market price is given. तो GDP at factor cost कितना आ जाएगा? कितना वैल्यू दिया है? 1600 है ना ये? No, 1100. GDP 1100. This is 1100. So 1100 GDP at factor cost from you have to calculate from market price. So it means 1100 से minus क्या करेगा आप? Minus what? IDT. What is the value of IDT? That is 150. So GDP at factor cost is how much? 950. And from GDP at factor cost, if I want to get GNP at factor cost, then 950 में NFIA कितना दिया? That is 150. So 150 100, sorry, 100 I'll add, so it will be 1050. That is your GNP at factor cost. Now you got GNP at factor cost and you know NNP at factor cost. ये दोनों का difference क्या हो जाएगा? Depreciation है. That will be 200 is the answer. Correct? All right. Now यहाँ पे it's not important here. Methods of measuring national income. So we have already seen there are three methods: value added method, expenditure method, and income method. Under value added method, what we do, we simply divide the entire economy into primary sector, tertiary sector, and secondary sector, and value addition done in each of the sector will be added up together to arrive at the GDP at market price, and then you simply put it back into the equation. Add depreciate, you want to get net, then you have to deduct depreciation, then you have to deduct net direct taxes, you have to add NFI. So you have to do this in all sectors, and to get the value addition, we have to do what? Value of minus intermediate consumption, value of output minus intermediate consumption. Now when I say value added is value of output minus intermediate consumption. Now can I also write this as sales plus change in stock minus, this is your value of output, minus intermediate consumption? Or can I write it here, sales plus closing stock minus opening stock minus IMC? Now why I have done this? Simply put, if you prepare your trading account, what do you write here? You have sales over here, that will come, let's say sales comes down to 1 lakh rupees. You have opening stock is, let's say, 10,000 rupees. You have closing stock, you have 5,000 rupees. Now tell me one thing, हाउ इज इट पॉसिबल दैट एन ओपनिंग स्टॉक में 5,000 क्लोजिंग स्टॉक बचा और मैं 1 लाख का सेल हो गया? इज इट पॉसिबल? नो. इट मीन्स देयर शुड बी सम परचेज. So that will be your intermediate consumption, IMC. That is nothing but your purchase. And let's say your purchase is, let's say, is 60,000. So it means what is remaining is your gross profit, but profit is also a part of value addition, right or wrong? So what we have done here, to the sales we have added closing stock and deducted opening stock and intermediate consumption in order to find out the total value added. Alright, अगर मैं 150 का intermediate goods खरीद के 200 रुपए में बेच रहा है, then I have done a value addition of 50 rupees on that particular commodity. And if that, suppose for that I have additionally purchased 20 rupees of additional input, then the value addition is 30 rupees. Correct? So that's how on value added method we have to do. So same way, GDP, this GVA at market price is nothing but GDP at market price. Net value added at factor cost is nothing but net domestic product at factor cost. So you can call it GVA or you can call it GDP. It means one and the same thing. So simply to distinctly mention that we have used method, value added method, that's why we do it like that. Income method. Production carried out by the combined factors of all production, these factors are paid out as incomes to the services rendered. So इसको distributed share method or factor payment method or factor income method, why we say, because whatever I have incurred as a cost in producing the commodity in the process of value addition, I must have incurred a cost, and whatever I paid for it may have become the income of those, you know, providers of factor input. So I can simply go over there and count what is the value of their income earned, and so the answer is simply compensation to employees plus rent of rent, interest and profit, that is operating surplus, plus mixed income of self-employed. If I add NFIA, then it will become NNP at factor cost. If I don't add NFIA and add depreciation, then it will become gross domestic factor at gross domestic product at factor cost. If I deduct NFIA and if I add indirect taxes and add depreciation, that will become GDP at market price. Understood? Clear? So don't get confused, sir. यहाँ पर कुछ और लिखा है, वहां पर कुछ और. You have to look at what you are calculating. Understood? Clear? Expenditure method, you simply, expenditure method has 4 things that you have to be taken into consideration. So expenditure, what we this is also known as income disposal method. So household, whatever the income they have earned, they have to spend now. So whatever the income, the households and not for profit organization, whatever income they have earned, they have to spend. So expenditure method usko bolte hain. And here you have private final consumption expenditure and government final consumption expenditure. In the private sector, people will consume. How will I find out the total value of market value of goods and services? If suppose I have bought 10 units of this pen, the market price of each pen is 100 rupees. So 100 into 10, 1000 will be added to the national income. All right, 1 million air conditioners are sold in the market, and average price, whatever is the price multiplied for each of the air conditioner, uska independent price hai, will be multiplied by that and added to the national income. That is private final consumption. It means we take the final value of goods and services, not intermediate consumption, but final value in the hands of the final consumers. What is the price being paid? We add it up together, we'll get the private final consumption expenditure. Just like private sector, government also consume, but it's very difficult to find out what is the market value of the government goods and services, because these are not like bought and sold and they do not command a kind of a market price. For example, if I go to Apollo hospital, I've told you, for one room they are charging 8,000 rupees per day. Not a hotel, but of course. So every, you know, private hospital mein bed ka koi charges, even in the general ward. So if suppose in the general ward there are 100 or there 100 beds, there are 20 beds or 10 beds, let's say each bed cost 1500 rupees. So it means 10 into 1500 rupees will be added. All right, but when you go to the government's hospital, are you paying anything? but the government is paying. The the staff in the government hospital is not working for free because you are getting free treatment. So here government cannot multiply the number of beds and the market price of each bed because there is no market price of the bed. So here what we do, whatever the government spends, whether towards healthcare or defense or education or social sector initiative, whatever is the collective aggregate expenditure incurred by the government, we are taken together. We don't have to multiply it for with per unit because we don't know what is the unit price. It's very difficult to value or measure the government services. So now we have added private final consumption expenditure, government final consumption expenditure, and then we will go for gross domestic capital formation, that is expenditure incurred on capital asset, machineries, tools, equipments, and everything. And from that, I have to add export and deduct import. Exports are considered as injections into the economy. So increase in export will increase the value of the GDP, whereas increase in import will lead to leakages and withdrawals, so decrease in the value of the national income. Mind it one thing, when you add export and deduct import, GDP at market price will remain at GDP at market price. It means domestic will not turn to national and either national will turn to domestic when you make an adjustment for export and import. But when you make an adjustment for NFIA, then national will become domestic or domestic will become national, depending whether you are adding it or deducting it. So export and import will keep the NDP at NDP, GDP as GDP, GNP as GNP, whatever it is. Nomenclature is not going to change. Huh? Why? Because you see, ex export kar raha hai, alright? Where it is goods are produced, you tell me. So it means activity that is performed within our domestic territory, correct? Even if a foreign firm is producing, it does not matter because it is done within our domestic territory. Import, you're deducting. Why? Because maybe our companies Bajaj वहाँ पे motorcycle produce कर रहा है जाके US में, but and it is imported into India, let's say hypothetically, but have we benefited from that? No. It means if more and more goods are imported, then the consumer's demand will be taken care of by more of the imported goods than a foreign product, than domestically made goods. So it means by that margin, the businesses in India will suffer from unsold stock. मैं 1 million टॉय बनाया चाइना से 500,000 इंपोर्ट हो गया, so what will happen? Half a million will be my unsold stock, or maybe they will also have some unsold stock, I will also have some unsold stock. It's not necessary that I will only suffer from all the unsold stock, but but the thing is, you are talking about purchase and sale that is happening within the domestic territory. You're not talking about whether a company is producing here and the company, because the thing is, even if Nestle produces Maggie here, we are going to add it to our GDP. And if Nestle produces Maggi and export, we will again add it to the GDP. But if Nestle imports into our country, we are going to deduct it from the GDP. So it means here investment is not going outside the country. Here only the production is happening between two different countries. But in case of NFIA, what is happening? Investment flow is happening between different countries. That brings a difference between domestic and national. So export and import में investment flow नहीं हो रहा है, goods and services are flowing, but NFI में investment flow is happening. That's why the nomenclature changes. All right. Now, all private final consumption expenditure, I have explained this to you, gross domestic capital formation. So now all these problems are given national income by value added with the help of following. So again, what you have to do, sales plus closing stock minus opening stock minus intermediate consumption, that will give you GDP at market price. Then you have to add NFIA, deduct depreciation, and then अच्छा फैक्टर कॉस्ट में निकालने का है, देन यू हैव टू डिडक्ट नेट इनडायरेक्ट टैक्सेस. इट मींस यू हैव टू डू व्हाट, deduct 150 110 and minus 110 and plus 50, you will get the value of the national income. So what we have done here is that simply आप इसको ऐड किया, इसको माइनस किया, इसको माइनस किया, इसको ऐड किया, so you will get GDP at market price. Then net factor income from abroad, you add, you get GDP at, sorry, GNP at market price. ग्रॉस से डोमेस्टिक से नेशनल हो गया. Then you deduct depreciation, you get NNP at market price, and then you do what? You deduct this and add this. When you do this, you'll get NNP at factor cost. Clear? All right. So exactly same thing is done here. So you got 70. All right. Now all these further problems you can do it yourself. Same thing is there. One more problem here. Yes, this particular problem you just take a look here. Different है तो इसीलिए एक बार देख लेते हैं एक बार. Yes, you have to calculate national income NNP at factor cost through value added method. So value of output in the primary sector 2000, intermediate consumption minus you got 1800, that is the value added in the primary sector. Again value of intermediate, value of output in the secondary sector 2800 minus intermediate consumption, you get the value here 2000, 2000 plus 1800, that is 3800. Then value output in the tertiary sector 1600 minus intermediate consumption 600, you'll get 1000. That will give you GDP at market price. Correct? Then you add NFIA, add नहीं होगा, minus हो जाएगा. That will give you what? GNP at market price. Then you deduct net indirect tax. That will give you GNP at factor cost. So इसको ऐड करेगा, ऐड ऑफ -50, तो अपने आप -30 माइनस हो जाएगा. Here you have to deduct it, and depreciation you have to again deduct it, so it will become NNP at factor cost. How much value you got?
4,000.
So let's see. 4000, only 4000. Last value मिल गया ना 4000. Same thing we have done. All right. Now let's move on to the next chapter. And please look at, these are very simply explained limitations of the national income. You just read it, and the class note that is given, that is more than sufficient for you guys. So that is all right. Keynesian theory. So under Keynesian theory, understand one thing. Which is the most reliable method of calculating GDP? You see dear, reliable method or unreliable, there is no one reliable method, because it's easier to do that rather than value addition method. In case of India, we largely follow the value added method. All right. Largely follow the value added method. So Keynes, Maynard Keynes is one of the prominent economists. He gave the concept 3 different models of national income in his very powerful paper, that is General Theory of Employment, Interest and Money, published in 1936. He devised 3 deterministic model, 2 sector, 3 sector and 4 sector model. Under the 2 sector model, there are only household and firms are present. This is an idealistic model because no economy can survive without the intervention of the government, because government maintains the rule of law. All right. But why do we calculate then national income with regard to 2 sector model? So that we can easily find out that when we compare it with the 3 sector model, wherein government is present alongside household and firm, then we can easily find out what is the changes in the national income that is brought about due to government intervention. And the fourth model that the third model, that is the 4 sector model, is more realistic model than the contemporary model, you can say, wherein national income is determined through the intervention of the government. It's an open economy model where export and imports are also taking place. There is household also, firm also. So first and second model, I mean 2 sector and 3 sector model are closed economic model, but 3 sector model, 4 sector model is a open economic model. Also understand, under circular flow of income, we always say that the household and the on one side and the businesses on one side, they will equalize. It means the total income in the economy will be equal to the total expenditure. So you see here, and of course certain assumptions are taken here. You look at the assumptions that is already given. I've given you, made you write in your classwork as well. That is, the method of production and technology to produce and the price level remains constant. It means there is no inflation. Keynes gave a short-term model. The investment is determined autonomously, or it doesn't depend on one fact, business or one household or only the government. So independently, so in the short run, it is assumed to remain constant. In changes in the interest rate will not affect the investment. Then we say there are no corporate profit. It means the entire profit of the business, I either put it back into the business or distributed entirely as dividend. There is no retained earning. All right. And of course, when you say about two sector model, it is a closed economic model without any presence of the government. So under circular flow of income, you see on one side you have household, other side you have firm. So this dotted line shows the factor flow. Continuous line shows the monetary flow. So household is providing what is known as factor input to the firm. What is this factor input? I'll give my labor, I will receive the wages. I'll give my premises, I'll receive the rent. I will give my money, I will receive the interest of the share in the profit. So when the household provide the factor input, with the help of which the firm is able to produce, the firm is passing on the monetary remuneration to the household. Now this money will become the consumption expenditure which will be earned by the firm. That will be the revenue income of the firm, and what flows to the as revenue income, in lieu of that the goods and services, that is the final goods and services, are sold to the household. Clear? So at the end of the day, I can say that factor payment made by the firms is equal to factor income earned by the household, is equal to the value addition of the goods and services, is equal to the consumption expenditure by the household, is equal to the revenue income of the firms, and is equal to the value of goods and services sold. So it means the income side and the expenditure side will eventually equalize. All right. Now under national income, understand that under Keynesian model, equilibrium is only determined at the point of national income is only determined at the point of equilibrium, not anywhere else. Only at equilibrium we will measure the national income. It means there will be disequilibrium on the left hand side and there will be disequilibrium on the right hand side. We will not measure the national income where aggregate demand and aggregate supply are not the same. So equilibrium is a point wherein aggregate demand and aggregate supply is the same, and whenever these two curves intersect one another, we will drop down a line and that will give us the value of national income. So only and only at the point of equilibrium, the national income will be measured under Keynesian model. So equilibrium, at the point of equilibrium, we say that aggregate demand equals to aggregate supply. Now aggregate demand, it means consists of two things, that is C and I. C stands for consumption expenditure or aggregate consumption expenditure, and I stands for investment, which is also remains constant. Sometimes we also write it as I bar because in the short run I do not change. But later on Keynes also said that what will happen if there is a change in the I, that will lead to multiplier effect. Now this C can be written as C equals to A plus BY, where A is the autonomous consumption. This is the minimum amount everybody have to consume in order to survive. We are not machine that we can go into hibernation, or polar bear chicks मन के लिए hibernation हो रहा है. There is it's a winter time. All right, sloth bear, they don't hibernate. So humans cannot hibernate. If you don't have money, you will have to buy. If you cannot buy, you beg, borrow, steal, otherwise you will die. So this is the minimum amount that a person have to consume in order to survive. That's why it is known as autonomous consumption, and it is also remaining fixed, because we have seen before that with the increase in our level of income, our expenditure on necessities are not going to increase much. Right? I'm not saying never, but in the long run, everything can change. And then you have BY, that is known as induced consumption. B denotes the proportion of income that you are spending on consumption, which is also known as marginal propensity to consume. We'll come to that part later on. So it means, first of all, understand that consumption is a function of income, and there is a direct relationship between consumption and income. It means when income increases, then consumption will also increase. But you have to understand, when income increases, consumption, if y increases, consumption is increasing only due to increase in the by, because a remains constant. So increase in the value of c is due to increase in the value of by, not in the value of a. So if suppose if I take the value here, let's say y is 2000 rupees, income is 2000, the value of a is 200, b is 0.6. Then if suppose I want to find out what is the aggregate consumption, what is the formula? C equals to a plus by, that is a is 200 plus b is 0.6 into 2000, that is 200 plus, that will be 1200, that is 1400 is the value of your C. If suppose the income increases from 2000 to 4000 rupees, double up your income. So now the value of C will be, that will be 200 plus 0.6 into 2000. So that will be 200 plus, that will be 2400, that will be 2600. So can I say that due to increase in income, the value of C has also increased? Correct? But we can find out that the value of A is constant here. It means this increase has only happened due to increase in the value of by. Correct? And what if my income is 0? If my income is 0, y equals to 0, then also if I want to calculate C, a plus by, that is a is 200, b is 0.6 into income is 0. So you'll have a value of C as 200. So can we say that when income is 0, then C will be equals to a, and we'll see that the a curve, C curve will begin from the same point as the a curve. All right, clear? So let's go here and see consumption. Consumption function. Consumption is a consumption function expresses the functional relationship between aggregate consumption expenditure and aggregate disposable income expressed as C equals to is a function of y. And then according to Keynes, the total volume of private expenditure in economy depends upon the total current disposable income of the people and the proportion of income that they decide to spend on consumer goods and services. That is your marginal propensity to consume, that is induced consumption by. The specific form of consumption income relationship termed as consumption function proposed by Keynes is C equals to a plus by. All right. So this diagram you see here, in this diagram we have already drawn this diagram in the class and I've explained it extensively. So this is the value of a. A is constant. Why? Because along the y-axis you have got consumption and along the x-axis you got income. Y doesn't denote y-axis. It denotes y means income. All right, y means income. So x axis के जगह y measure करता हूँ. It means income we measure. So you see, income increases or income decreases, it doesn't matter. The value of a remains at same. Let's say our value have taken rupees 200, so we'll take 200 here. So when the value of a cannot be 0, value of C cannot be 0. And so C curve will not begin from the origin. Why? Because if C curve begins from the origin, it means A can be 0. If C is 0, it means everything is 0. But C cannot be 0. So at 0 income, C curve begins from the point where A is there. But C, unlike A, has an upward sloping curve. Alright, it's an upward sloping curve. It means with the increase in my income, you see, consumption is increasing. Income increases, consumption increases. Income increases, consumption increases. Clear? So it means that's why there is a direct relationship between consumption and income. But it is increasing due to induced consumption. Now why this angle is denoted as B? Because it depends upon the value of B that will determine whether the consumption line will be like this or it will be like this. If I say your income is 1000 and the value of B is 0.8, then what will be your consumption? That will be in 800 से बढ़ जाएगा ना. Significant consumption. It means 80% of your income, increased income you are consuming. Don't you think the line for B will be like this? All right. So it means little bit increase in your consumption, and you see by how much is your a little bit increase in your income, and you see relatively by how much the consumption has increased. But what if the value of B is equal to 0.1? It means 100 rupees only out of 1000 rupees you are going to spend as consumption. So it means, don't you think the value of B will be like this? All right. It means you are a miserable human. All right. देखो एग्जॉर्बिटेंट होता है ना, उसका लाइन ऊपर जाएगा, एंड मिजरेबल ह्यूमन नहीं 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 नहीं. ऑलराइट, विल डिबेट फॉर इवन 50 पैसा, वाई 50 पैसा मोर, सो दैट वो सोया रहेगा वो लाइन. ऑलराइट, सो दैट विल बी डिटरमिन्ड by the value of B, and B is considered as marginal propensity to consume. Now what is marginal propensity to consume? Propensity means frequency, or you can say rate. At what rate I am changing my consumption. All right, higher the propensity to consume, more will be the increase in the value of C when your income increases. So B denotes MPC. So B, if I want to calculate MPC, I have to simply find out what is the change in my consumption due to change in my income. All right, change in consumption by change in income, or we can say by how much will there be a change in the consumption when there is a change in income by 1 rupee. So it means if I have a value of MPC, that is B is 0.7, then for every 1 rupee increase in my income, 70 paisa I am consuming. It means for every 100 rupees I am consuming 70 rupees. For every 1 lakh rupees I am consuming 70,000 rupees of out of my income. All right, that is your marginal propensity to consume. All right, then there is average propensity to consume. APC kya hai? If I remove the delta from here, this will become APC. So it means if I write C by Y, that is a total consumption by total income, aggregate consumption by aggregate income, that will give me my average propensity to consume. It means it denotes consumption per unit of income. Just like MPC, we have what is known as APC, marginal propensity to save as well. MPS, marginal propensity to save. All right, so marginal propensity to save, remember one thing, saving is also a function of income, because when your income increases, not only your consumption increases, your saving will also increase. A rich man will save more compared to a poor man. Rich man will also consume more compared to a poor man. But one thing you have to also understand, income is consist of both savings and consumption. So it means if I want to get savings from the income, I have to simply deduct the consumption. Or if I want to get consumption from my income, I have to simply deduct the savings. That's it. Correct? So it means income can either be consumed or it can be saved. It means the part of the income that I've consumed, I cannot save it anymore. So if I want to get marginal propensity to save, what is the formula for marginal propensity to save? That will be change in saving due to change in income. Or can I also say, that MPS is nothing but 1 minus MPC? 1 minus MPC. Now remember, no person, it is assumed that he will consume entire of his income, in entirety of his income, and neither he will save all his income. So it means neither MPS nor MPC will be 0 or 1. Both of their value will vary between 0 and 1. So it means we can say that MPS plus MPC equals to 1, or we can also say that MPS and MPC both are greater than 0 but they are lesser than 1. Clear hai? Right? And just like MPS, you have APS. APS will tell you that what is the total consumption, total saving by total income. Simple. Now let's come to the concept of equilibrium. Now under equilibrium, I've told you equilibrium is the point wherein aggregate demand is equals to aggregate supply. Now aggregate demand side is known as the expenditure side, aggregate supply side is known as the income side. Aggregate demand, we write C plus I, where C stands for consumption of consumer goods and I stands for consumption of investment goods. Whereas aggregate supply, we write it as C plus S, wherein C stands for production of consumer goods and production of investment goods. So it means, you see, understand one thing. It is the investment that will lead to savings into the economy. As simple as that. So we will measure the national income at the point wherein aggregate demand is equals to aggregate supply, or C plus I equals to C plus S. Now you have to understand one thing, that demand and supply are interrelated. Meaning what? If suppose demand is higher than supply and suppliers are producing more, then don't you think demand will also increase? The answer is yes. How demand will increase, sir? If I'm producing more, how the demand will increase? Again, synchronic effect. If I'm producing more, I will generate more employment. I will consume more factor input from the household. It means more factor flow to the household. The household are getting more money. Don't you think demand will increase? Supply will increase, again demand will increase. Supply will increase, demand. So when the supply rises very sharply, at some point it will crisscross the demand. It will cross over the demand, and then supply is more than demand. So in the process, you have achieved equilibrium. And the moment you achieve equilibrium, Keynes said, measure the national income at that particular point. Now, when you have supply in excess of aggregate demand, aggregate supply is more than aggregate demand, businesses will have unsold stock. They will decrease their supply. But don't you think when they decrease their supply, demand will also fall down? Why? Because when they're decreasing their supply, they are decreasing their level of production. It means they will require less manpower, less factor flow from the household will happen. So household income will fall, demand will fall, supply will fall, demand will fall. And when the economy goes into a sharp fall, in between you'll have equilibrium, but now at a lower income level. So now you are measuring national income at a lower level where equilibrium is having. It means there is a kind of a deflation or recession that is taking place in the economy, and then eventually this up and down will continue to happen. So can this be put into a diagram? Of course it can be put into a diagram. Very simple. So you see, here we have drawn these diagrams in the class. So you see, this is your aggregate supply curve. This is your aggregate supply curve, which is dividing the area between the x and the y axis into two equal halves. That's why 45-degree angle. This is a right angle. And this is your aggregate demand curve, that is your C plus I. Now at this point, the aggregate demand and aggregate supply are meeting with one another, and this is where the equilibrium is achieved, that is y0 level of income. Because this C is not going to calculate, help us find out demand, because C is only consumption, autonomous investment is not taken. So even if you don't draw C, no problem at all. All right, and you don't have to draw, you don't have a subjective paper, you have an objective paper. Otherwise economics would have become a nightmare for you guys. All right, so easy. If you have understood, then you have to write it very nicely. But the thing is, you cannot, those who take even 5% less serious, then you are gone. That is the problem. So now what happens here? Then income. Income you are determining at this point. Now tell me, before this point is reached, the green line that shows aggregate demand, this is your aggregate demand. Green line shows aggregate demand is above the red line. It means demand is more than supply. And so when the supply is meeting the demand, you see demand is also rising. Supply is also rising, demand, and they cross over one another. And beyond this point, at point B, what is happening? You have supply, that is the red line above the green line. It means excess supply over demand. So when you decrease the supply, then you see there will be decrease in the demand as well. जो आप decrease करेगा supply, you see at this point you have supply here and you have demand here. But when you come down here, you see supply you have reduced and demand has also come down. All right. So equilibrium is measured at this point. All right. Now the question comes, at the point of equilibrium, do you think there is full employment in the economy or less than full employment? Keynes never said anything. Keynes said there may be full employment, there may not be full employment. But if there is full employment at the point of equilibrium, then any increase in demand beyond that point cannot be met. and it will create what is known as inflationary gap. All right. And if suppose the economy has achieved equilibrium, but it has not yet fully utilized its resources, then that will create a deflationary gap. It means demand is on the lower side. If the demand increases, the businesses will be able to meet the demand. But right now demand is on the lower side. That's why there is a deflationary gap. So this brings us to this inflationary and deflationary. पहले inflationary gap देखिए. Simply understand one thing. You have to find out inflationary gap. Easy है भाई. This is your aggregate supply curve and this is your aggregate demand curve, that is C plus I. So in case when there is inflationary gap, the aggregate demand curve will shift upward and this will be, but the supply cannot be increased. Supply cannot be increased, but the demand is rising fast. So there will be a problematic situation here. So this with this excess demand will create what is known as inflationary gap. So again here you see this is the actual aggregate supply curve that I'm plotting in red color. You can see this is your aggregate supply curve, that is C plus S. All right. And originally this should have been your aggregate demand curve. All right. So it means the equilibrium should have remained over here at Q star. Now what has happened is that there is an upward shift in the aggregate demand curve, and now your aggregate demand curve is denoted by this yellow line. Now question is, at this point we have got this level of national income. Now when aggregate demand has shifted up, then you will say, sir, then supply we have also increased. No, from point F supply is increasing to point T. No, supply is not increasing. Supply cannot be increased. If supply can be increased here to this point, then no problem at all. Then there will be no inflationary gap. So what has happened at this point F, you have both demand and supply. And what happens? There is an upward shift in the aggregate demand curve and demand shifts from F to E. Demand shifts from aggregate demand shift from F to E. But supply cannot be shifted from F to E. So as a result, you see wherever the previous aggregate demand and supply was meeting, from there you draw a straight line, and wherever it intersects the new aggregate demand curve, that will tell you the gap is known as inflationary gap. All right. Next here, deflationary gap. Now when deflationary gap happens, when there is underproduction. I have a factory that can produce 1000 units, but the demand was 900, it has fallen down to 700. Am I not underutilizing the potential of the fixed economy, fixed resources? In the same way, when in the economy there are resources, but the resources are not optimally utilized. For example, what happened during COVID menace? The factories were there. It's not that asset was destroyed. Asset to wahi tha. But factories were there, but people were sitting at home. The output of the businesses fell down by 50-60%. In some businesses, shutdown has also happened. So economy has the potential over here, but due to shutting down, the production is happening here. Why? Because the demand has also fallen, because people's income has fallen. Many people have lost the job. Many people have died. So what has happened here? Now the aggregate demand has shifted toward the left. It means downgrade of the aggregate demand curve happened. Now we know that when demand is increasing and shifting toward the right, toward the upper side, and demand is on the higher part, supply cannot chase the demand over there. But when the demand falls down, don't you think I can decrease my supply in the short run? Can I decrease my supply? Of course I can decrease my supply. I can make my supply to zero as well. Factory lock kar dene ka. But when I am producing 10,000 units and 10,000 is the limit of my factory, can I produce in the short run 11,000? In the long run, if I set up a new factory, I can increase my output to 12,000, 15,000 also. But in the short run, because this is a short run concept that Keynes gave. In the short run, I cannot do that. So what has happened here? That now, again, this is your aggregate supply curve, this red line. All right. So that you can easily notice, this is your aggregate supply curve. Now the demand should have been over here and the national income should have been achieved over this point at Q star. But what happens here? The demand shifts from point A to point E. All right, it means downgrade in the demand curve happens. When the downgrade in the demand, it means there is a fall in the aggregate demand. What happens? The intersection between the aggregate supply curve and the demand curve happens way earlier than at Q0 level of income. It happens at M level of income, meaning that economy can produce at this level provided there is increase in demand. But due to fall in demand, it means downward shift in the aggregate demand curve. The supply has also been shifted from point F to point E. And now the economy is achieving equilibrium at point E rather than at point F. So it means wherever you have, let's say this is your new aggregate demand curve, new hai, ये actual होने मांगता. So wherever the actual is, from there you draw down a line because now the aggregate demand curve is on the downside, not on the upside. All right. So there you draw down a line from there, and wherever it hits, that will give you what is known as depressionary gap or recessionary gap. All right. Clear hai? So inflationary, you can take the break right now. We'll finish this off after the break, and we'll see. We can start one more next chapter. All right. See you. Half an hour. 3:30 will begin.
What do you think? Platform. Content platform. कुछ लेके जाते हम थे you might not know. I thought vinegar is a little that you make mistake.
Yeah. That's okay. They can be watched.
All right, online students, audible? Okay, so now here some of the problems are given here, and which is very easy to calculate. We have already solved many of the question. So calculate marginal propensity to consume and marginal propensity to save. It means you have to calculate MPC, you have to calculate MPC and MPS from the following data. National income is 2500, autonomous on most consumption expenditure, that is A is 300, investment, that is I is 100. So we know that under Keynes circular flow, we measure national income only at the point of equilibrium. So at the point of equilibrium, we know that aggregate demand is equals to aggregate supply, or we can say that C plus I is equals to C plus S. It means that will be equals to Y. So can I take this here, C plus I is equals to Y, or Y equals to C plus I? Correct. Right. So national income given is 2500. So can I write in place of Y as 2500, and C is A plus BY. A is 300 plus B I don't know, but Y I know. So if I write BY here, Y is given as 2500. So can I write BY as 2500 B? Alright. So A plus BY, that is 2500, B plus I is given as 100. So you simply solve for B. So 2500, this will go to the other side, it will become negative. So that will be 2100 equals to 2500 B. So value of B will be 2100 divided by 2500. So that will be 0.84. So if MP, this will give you MPS. This is your MPC. So if I want to get MPS, MPS will be 1 minus 0.84, that will be 0.16. All right. Same way, this problem is also there. Now here they've given marginal propensity to save. You have to find out national income. Now why you have to find out? Marginal propensity to save is given as 0.2. So what is the value of marginal propensity to consume? 0.8. All right. So this is your 0.8. So can I write here again y equals to autonomous consumption is 100 plus investment is A plus BY, that is 0.8, Y plus I is 200. So 0.8y will go there, it will become 0.2y equals to 300. The value of y will be 300 by 0.2, that will be 5 times, that is 1500. This way you can solve all the remaining problems. Here in this, they've given just nothing but investment value, they've given in function form rather than in absolute value form. Easy. And same thing is there, same thing is here. All right. Now here you have to be careful that now we know that C plus I is equal to C plus S. When I cancel out C plus C, can I write I as S? And I they've given 50. S का function दिया है. So can I write here that S equals to minus 10 plus 0.2 Y. So S की जगह I can write that is 50. Alright. So it will become 60 equals to 0.2 Y. So Y value is 60 divided by 0.2. That will be 300. Y value is 300. What will be the new level of income we have found out? Consumption. Consumption you have to find out. Consumption will be how much? If income is 300, saving is 50. So consumption will be 250. Simple. Done. If the investment increase permanently to 5 crore, it means now new S will be again same 55 rupees रख के यहाँ पर minus 10 plus 0.2 Y. If you do it, you can find out a value of again Y and then find out the new consumption. Clear hai? Same. 270. Okay. Now investment multiplier. So understand what is investment multiplier. Very important. A lot of questions you are going to get from it. Investment multiplier is, we have assumed that I remains constant in the short run. But what happens if ayo? We know that I remains constant in the short run. But in the long run, if I increases, then what we'll have to do? We have to again recalculate where is the level of in national income. Equilibrium will shift toward the right. So when I increases, what will it lead to? It will lead to a multiplier effect. Meaning what? That increase in the national income will be in greater proportion than the increase in autonomous investment due to synchronic effect, multiplier effect. We call it as also as a ripple effect. So if investment increases due to ripple effect, what happens? That if autonomous investment increases by 1 rupee, then the increase in the national income will be more than 1 rupee. And how does it happen? Simply saying that, let's say there is autonomous investment increasing in the infrastructure in the secondary sector. It means it will generate employment there. Those people who are earning the money, they will create demand, and when they will create demand, that will create opportunities for other businesses to build more infrastructure and produce more goods, further generating employment. And this is how the cyclical way the investment multiplier works. So investment multiplier is denoted by the letter K, right? And we want to find out the value of K. We write it as what? Change in income due to change in investment. So what will be the change in the income if autonomous investment changes by 1 rupee? Increase or decrease doesn't matter. But why? So if suppose that the value of multiplier is 5 times, then for every 1 rupee increase, 1 rupee increase in the value of I will lead to increase in the Y by rupees 5. That is investment multiplier. Clear? So even looking at the diagram, you can easily find out that where investment multiplier, how it is happening. So same way, this is your aggregate supply, correct? And initially this was your aggregate demand, by the way. This was your aggregate demand, that is C plus I. And then C plus I is increasing because I is a part of the aggregate demand. If I increases, then aggregate demand increases. So there is an upward shift in the aggregate demand curve. Now the question is, sir, ये parallel line क्यों है? Because it's not that investment increases every single day. If I'm running my factory, let's say, and I've reached the maximum potential of my productive capacity of the machine, I will buy new machine. But that's it. Will I buy new machine every week? No. All right. So it means investment do not increase in the short run just like that. In the long run, it increases and remains stable for a very long period. And that's why this is your I that is increasing. So let me color it with a yellow paint. So what has happened here? Initially, you have achieved equilibrium at a lower level of income. That is Y0. And due to increase in investment, your equilibrium shifts from E to E dash, because now your equilibrium will be determined by this aggregate demand. You can call it as AD dash. So C plus I plus delta I, let's say C was 1000, I was 300. Now delta I, it increases by 100 more. So C plus I, that is, you have to add 300 plus you have to add 100 rupees or 200 rupees more. So this will lead to shift here, and as a result the new equilibrium is achieved at E dash at a level of income that is Y1. You can ignore this Y2. So now if I compare by what margin is the increase in my autonomous investment, by this and by what margin is the increase in the income? Can I say approximately that income is increasing maybe 2.5 times or 3 times more than the increase in the autonomous investment? It means there is multiplier effect at play. If there was no multiplier, then income would have increased by the same margin as the increase in the autonomous investment. Then there is no multiplier. It means the value of multiplier is 1. Value of multiplier cannot be 0, and multiplier will always be there. All right. So higher the multiplier, more will be the increase in the national income. Again, what is the value of your multiplier? That depends upon the value of marginal propensity to consume. So that is value of B. Because in an economy, remember one thing, in every developed countries, you will find one thing common. And what is that common thing? That the rate of consumption is very high in those economies, very, very high. So if the rate of consumption is very high in an economy, then most of the people, it means significant part of the income earned by the household that is spent on consumption, right? Which will give the value of B to be very, very high. So higher the value of B, more will be the value of K, and vice versa. Okay. So it means we can calculate the value of K using MPC using another formula, that is K is 1 by 1 minus MPC, or 1 minus B. Now let's say if the value of B is 0.5, then the value of K will be 1 by 1 minus 0.5, that will be 1 by 0.5. So that will be 2 times. It means for every 1 rupee increase in autonomous investment, income will increase by 2 rupee. But if the value of B, if I increase it to 0.8, then the K will become 1 by 1 minus 0.8, that will be 1 by 0.2. So that will be 5 times. All right. So higher the value of MPC, greater will be the value of investment multiplier. And if suppose, understand simple logic, if consumption is opposite of saving, higher MPC means lower saving, means higher K, but lower MPC, it means higher saving, it means lower K. So the marginal propensity to save and the value of K have inverse relation. It means higher the value of MPS, lower will be the K, value of K, and vice versa. So we can also calculate the value of K using MPS. So simply we'll write 1 by MPS, because we know that MPS is nothing but 1 minus MPC. So don't you think this is exactly what we have done over here? 1 by 1 minus B, that is 1 by MPS. So negative relation होगा MPS से, greater the MPS, lower will be the value of investment multiplier, and vice versa. Now let's continue. This you've done. Leakages very simple. What are the reasons due to which the value of multiplier may decline? You don't have to read it, just understand it simply. What will lead to decline in the multiplier? Import. If suppose income is spent to buy goods which are imported, this money, if the good was not imported, then it would have created production opportunities in our country, would have generated employment. But if you are importing, then the value of multiplier will go down. What if your increased income is used for payment of debt taken in the past? It means this money would not create new demand, that will reduce the value of multiplier. What else? If suppose the economy has already reached a point wherein no free resources are available, then increase in income will only lead to increase in MPC, will only lead to inflationary pressure, but real growth is not going to happen. Then taxes. If the government is taking progressive taxes, it means with the increase in your income, you have to pay increased taxes. So your liability of tax will also increase. It means without the tax, the entire increased income would have been available for me to dispose it the way I want. Now because I'm paying taxes, then by the amount of taxes I'm paying, my disposable income will reduce and consumption will mellow down. So it means again, the demand is going to fall down and having a negative impact upon the in multiplier. If there is a very higher MPC, lower MPC, but higher MPS, people prefer to hold idle cash in hand. If we are holding idle cash in hand, we'll see in the in the chapter ahead that it will lead to increase in the currency ratio, and higher currency ratio, it means the value of the multiplier, money multiplier, will go down. That is again the problem. What if you are using this money, that increase income you have, but you are using this money to buy stocks and bonds from the market? That is not going to create any kind of new asset in the economy. That will also lead to decline in the value of multiplier. All right, all these things combined are known as leakages in the economy. That will reduce the value of multiplier. So now you see another problem is given. In an economy, investment expenditure is increasing by 400 crore, by 400 crore. So I is delta I is 400 crore, and marginal propensity to consume is 0.8. The value of B is 0.8. All right, so you have to find out national income and saving. So it means first of all you have to find out the value of K. 1 by 1 minus 0.8, that will be 5 times. So it is increasing by 400, so income will increase by 400 into 5 times, that is 2000. That is the value of your income. Increase in income and saving. अभी income का कितना consume किया 0.8, so saving कितना किया 0.2, so saving will be 400. No, 400, no, 20% of of your income. That is your answer. Next one, you see increase in investment by 400 crore. So delta I is 400 crore, leads to increase in national income. Delta y is 1600. It means 4 times the national income. Calculate marginal propensity to consume. We know K is 1 by 1 minus B. So we have got the value of K, that is 4, is 1 by 1 minus B. So it means 4 minus 4B equals to 1. So that will be minus 4B equals to 4. Idhar gaya to minus 3 cancels out. So the value of B is 3 by 4, that is 0.75. Easy, clear? These problems you can easily solve. In an investment increases by 600 crore, if marginal propensity to consume, same problem. Suppose in a country income increases by, investment increases by 100, consumption is given this. Easy, you can easily solve, same logic. Now 3-sector model. Now in a 3-sector model, apart from household and government, apart from household and firm, there is presence of government here. We call it government sector. And government intervention is taken in terms of 2 ways. First is government expenditure, and then is taxes. Now here taxes means direct taxes I'm talking about, not indirect taxes. Now remember, government expenditure are considered as injections, because it doesn't matter. Keynes said that whether it's a transfer payment or whatever payment, it does not matter. If household will get some money, household will spend this money. So when household is getting as subsidy, a household is getting as free income from the government, transfer income, unemployment allowance or whatever, or the government is constructing airport, bridges, flyovers. If the government is spending money, household is the owner of the factor input. They are providing the factor input to the government, means household's income will increase and they will consume more. As a result, injection will happen into the economy. But tax reduces the disposable income in the hand of the people. As a result, taxes are considered as leakages. Now, Keynes, apart from all the assumptions that have taken, one additional assumption you have to take here. So the government gets the taxes, and government is, this is the expenditure. There can be 3 outcomes of in a budget. That is, either the G is more than T. In this case, there will be net injection. So this is known as deficit budget. When T is more than G, then there will be net leakages. So this is surplus budget. Both of these are not considered. It is considered in the as an assumption in a 3-sector model that G will be equals to T. It means there will be balanced budget. There will be balanced budget. And when there is balanced budget, then you see, sir, national income will not increase. It means economy will achieve equilibrium at the same point where it achieves in a two-sector model. The answer is no, because there is multiplier effect. And we know that eventually multiplier effect diminishes. So let's say if the multiplier value of K is 10 times. Now money is money, whether it pumped into the economy as I or whether it's pumped into the economy as G. Money will do its work. All right. Let's say somebody gives you 10,000 rupees for performing good in your office. And when you are walking on the way, you found 10,000 rupees lying. Don't you think the effect is same? All right. Effect is same. You will do the same way you are going to react, that you are going to spend this 10,000 rupees. So whether G increases money into the market or I increases, the effect is same. That is multiplier will happen in the economy. Now government increases the value of G. Let's say government spends 100 crore rupees. Now this multiplied by 10 times, it means it will become 1000 crore. And eventually later on we know that multiplier diminishes. Now the value of multiplier falls down from 10 to, let's say, 4 times. And then the government is increasing the taxes. Government is taking a taxes of 100. So when government pulls out 100, now how much will be pulled out? 400 will be pulled out. So pump hua 1000, pulled out is 400. It means 600 still there in the economy. So it means even if you follow a balanced budget, still increase in government expenditure will lead to shift in the national income. It means equilibrium will be achieved at a higher level of income. All right. Now, aggregate demand equilibrium is achieved at the point I have told you aggregate demand is equals to aggregate supply. Now, aggregate demand will write it as what? Same that's before C plus I plus G minus T. I'll write here and here C plus S. But in order to get by convention, move this T to the other side. Then C plus I plus G will become, and here equals to C plus S plus T. So this is the aggregate supply side. This is the aggregate demand side. Now you'll have simply one more curve apart from same way आप एक कर्व बनाता था ये C plus I है C है C plus I है C plus I plus G. In a two sector model it will be appeared here. In a four sector model it will be here, and you can see here this is the increase here by the government intervention, and income is increasing by this margin. Same example is given over here. So you see here you have to correct it. C plus S plus T. So again, you have this aggregate supply line, and then you have initially this curve as you will achieve in a two sector model here, and then you have the green line that shows aggregate demand. You see equilibrium achieved at a level of income that is Y1. And you see, even when the government is following a balanced budget, still government intervention increases. This G curve will indicate that there is an increase in the national income from Y to Y1. All right. So some of the problems are given here. So understand when you want to find out this problem. That is, in case of two sector model, there was no difference between Y and YD, wherein Y is disposable income, Y is the income. Right. So in a three sector model, your YD will be Y minus T. From the Y you have to deduct T, as simple as that. So it means first you have to calculate the value of C whenever you are solving up any problem. So if I write the value of C, C is what? A plus BY. Now instead of BY we'll write BYD. So can I write C as A plus B, YD ki jagah Y minus T? So C will become A plus BY minus BT, correct? And we know Y equals to C plus I plus G. So now we can write here Y equals to A plus BY minus BT plus I plus G. That will give you the national income. क्या हो गया? Clear? All right. So if we take a look at the problem now, here find out the value of equilibrium level and find out the value of multiplier. So first C is given here. So if I want to find out, so and I is 50, G and T equals to 20, C is I and this is given, no problem at all. T is the tax here. So if I want to find out what is YD, is it visible or should I change the ink? YD is Y minus T, that is Y minus T is 20, that is your YD. So if I want to find out C, what is C? 10 plus 0.75 Y minus 20, sorry, yes, plus I is 50 plus G is 20. All right, Y equals to, sorry. So A plus B, YD plus I plus G. Now you solve for Y. So 10 plus 0.75 Y minus 20 into 0.75, that will be 15 plus 50 plus 20. So Y minus 0.75, Y equals to 50 plus 20 is 70, 70 plus 10 is 80, 80 minus 15 is 65, and here you are left with 0.25y. So y equals to 65 divided by 0.25 to 260. 260 is the value of y. Alright, what is the size of the multiplier? What is the value of b? 0.75. So k equals to 1 by 1 minus 0.75. So that will be 1 by 0.25. So that will be 4 times. Clear hai? Next here you see, suppose structural model, same thing is given now. TR, understand one thing more, that TR is nothing but, इसमें सम्स में सब में एक एक प्रॉब्लम में एक एक चीज, TR is the transfer income. Keynes said that देखो, just tax decreases the disposable income, transfer income will increase the disposable income. So now after we have to YD, from the Y I have to deduct T and I have to add TR. That will be your disposable income, correct? So if we look at the problem here, so C is given, TR is given, T is given. So if I want to find out YD, YD will be Y minus 100 plus 50. So can I write Y minus 50? Correct? So Y minus 50 ho gaya. Right now? Now if I want to find out C, Y, so C is 100 plus 0.75 YD, that is Y minus 50 plus 200 plus T is G is 100. Right, I is plus G plus I plus G. So then Y will be equals to 100, 100 plus 200 is 300 हो गया ना, यहीं पे ऐड कर लो ना, बार बार क्या लिखेगा. So 200 plus 300 plus 0.75 Y minus कितना 37.5. So this will go to the other side, that is Y minus 0.75 Y, that will be 0.25 Y equals to 262.5, correct no? So Y will be 262.5 divided by 400 कहाँ है? 213, 213 and 4. Oh, sorry. That will be 400 minus, so it will become 362 na? 362 pi divided by 0.25. How much? 1400. 1450 is the value of Y. Clear? So be careful when you do in the examination. Now here then different types of taxes are given. Do you remember the value of multiplier? Tax multiplier? Who can tell me? 1 by 1 minus B plus T or TY? Huh?
T.
Sure? TY? TY? Correct. So it means you have to take into consideration that. So now here what happens here, there are two types of taxes. One is lump sum tax, one is known as proportional tax. All right. So both taxes have to be considered. Proportional tax is taken as a proportion of income. So total tax will be T plus TY. All right, T plus TY. So now if I have to get transfer income, then you'll add transfer income here as well. So consumption is given this one, YD hai ye, I is itna, total tax is given this one. So can I find out YD? YD is Y minus T. So दोनों को minus करने का ना. So can I write here Y minus 25 minus 0.1 Y? Or what you can do is Y minus this plus this. बात तो वही हुआ ना. Correct? So y minus 25 minus 0.5 y. So it means y will be y minus 0.y is 0.9 y minus 25. That is the value of your yd. Now if I want to find out the national income, then C is 75 plus 0.5. That is the value of B, yd 0.9 y minus 25. So C plus I is 80. All right, and plus G is 100. यही है ना कि कुछ भूला? नहीं, सब ठीक है. Y equals to 100 plus 80 plus 75 करो कितना? 180. Then 255, no? 255 plus 0.45 Y minus 12.5. यही है. So Y minus 0.45 Y equals to 242.5. So 0.55 y is 242.5. So y will be 242.5 divided by 0.55. So that will be 440.90.
Yes. 440.90.
That will be the value. Correct. Find out the value of multiplier. वन माइनस बी प्लस बी टी. टी वाई बोल रहा था. ऑलराइट, 1 minus b plus bt. I made you write all the formulas, no? So 1 minus b plus bt. That will be the value of multiplier. So if I want to find out the value of multiplier, it will be 1 by 1 minus b. That is b is क्या value है? 0.5 plus bt. That is 0.5 into 0.1. Whatever value you get, that is your answer. Clear है? अभी इसमें क्या दिया? सब चीज दे दिया इसमें. Correct? Easily you can solve. No problem. Online students. Done. 4-sector model. Now in a 4-sector model, there are two different, it's an open economy model, which is the actual contemporary model, as you can say. So it is an open economy model. It means apart from household, firm and government, there is the presence of external sector where exports and imports take place. So again, export X is denoted by X and imports are denoted by M. Exports are considered as injections into the economy, and increase in export will lead to increase in the GDP, national income. An increase in import will lead to decrease, as we have seen already. So either you will have positive export, in this case equilibrium will be achieved at a higher level of income, so there is net injection, or M more than X, there is net leakage. It means equilibrium will be achieved at a lower level of income, as simple as that. So either you will have net export or net import, right? So in case of equilibrium in a four sector model, on the aggregate demand side you have C plus I plus G plus X minus M. On the aggregate supply side you have C plus S plus T. All right, clear? C plus S plus T on the aggregate supply side. So this is your aggregate demand side, this is the aggregate supply side. Remember, demand side is the expenditure side, supply side is the income side. So you'll have one more curve that will tell you whether you have a net positive export or you have net import. So when you have net import, it means equilibrium will be achieved at a lower level of income. When you have net export, it means equilibrium will be achieved at a higher level of income. When you have net export, it means at the point of equilibrium, your aggregate demand curve, that is C plus I plus G X minus M curve, will be lying above the C plus S plus T curve. Whereas if there is net import, then at that point your C plus S plus T curve at the point of equilibrium will be above the C plus I plus G X minus M curve. All right, so looking at the diagram we can easily find out where there is net positive, net exports or net import. You see here again, this is your aggregate supply curve, aggregate supply curve. Then you have consumption line, forget it. Then you have C plus I, and let me color the only two parts that is important for us. You have C plus I plus G, and as usual the green line indicates the aggregate demand curve, that is C plus I plus G X minus M. Now you see at this point, that is this particular point, aggregate demand and aggregate supply curve meet. And at this point, where does the blue line that indicates C plus I plus G curve lies? It lies above it. It means there is net import and the economy has achieved equilibrium at a lower level of income, that is Y1. And you can find out here also that up till this point, this area, the green line is above the blue line. It must C plus I plus G X minus M is lying above the C plus I plus G curve. It means up till that point there is net export. But then crossover happens, and beyond this point you see C plus I plus G is lying above C plus I plus G X minus M. It means there is net import that is happening. So if suppose other way around, if you would have to draw the diagram simply showing, so this is again your consumption, aggregate consumption or expenditure side, you can say expenditure side, and income side, this is your aggregate supply curve, that is C plus S plus T, and this is your C line, this is C plus I, this is C plus I plus G, and this is one point wherein you achieve equilibrium. Let's mark this point as E dash Y dash, and then you have C plus I plus G X minus M. So that is C plus I plus G plus X minus M, and the interaction happens over here. Let's mark this point as E, and this is your Y. So you see now all throughout we are getting a situation wherein there is net positive export, because all throughout the C plus I plus G X minus M curve lies above the C plus I plus G curve, and at the point of equilibrium you see here is the C plus I plus G and here is the C plus I plus G X minus M. It means the equilibrium is achieved at a higher level of income and there is net exports in the economy. Clear? Now let's take a look at the sums. The consumption function is C equals to 40 plus 0.58 YD, T is 0.1 Y, I is 60, G is 40, X is 58, and M is 0.5 Y. It means 0.505% of the national income. So likewise you'll first calculate disposable income, that is Y minus T, that is 0.1 Y. TR है क्या कहीं? TR नहीं है. So YD will be equals to 0.9 Y. That is the value of your YD. Now if I want to find out income, that is C is 40 plus 0.8 YD, that means 0.9 Y. Alright, plus I 0.8, 0.9, yeah, plus I is 60 plus G is 40 plus X is 58 minus M is 0.05 Y. So open the bracket, 40 plus 60, 100, 100 plus, this is 40 है ना ये? Alright, so 140 and minus 58, how much it will be? 198. 198 plus 0.72 Y minus 0.05 Y. Send all the Y's over there. So Y minus 0. Tell me what is the final value. ये minus होगा, ये plus होगा. 0.33 Y equals to 198. So Y will be 198 divided by 0.33. What is the total value? 600 is the total value here. Correct. Now what have they found? Net export. Net export. So first find out import kitna hai. So export we know is given as 58. Import will be 0.05 into 600. So that will be 30. So X minus M, that will be 58 minus 30, that will be 28. Alright, clear? Now they've said if net export were to increase by 6.25. So simply what you have to do, later on you'll solve. Here export you have to increase 58 से 64.25, ये add करके, ये change करके you can calculate, recalculate again. Right? And then they've asked you foreign trade multiplier. What is the, how do we calculate foreign trade multiplier? 1 by 1 minus B plus BT, that is your tax multiplier, plus M, small m. Two types of imports are there. So now they've given again same way, you have to calculate this one, national income first, equilibrium level of national income. So tax is 0. It means YD will be equals to Y. You don't have to calculate anything. So income will be 60 plus 0.9 Y plus I is 10 plus G is 10 plus export is 20 plus, sorry, minus import, to import, that is again lump sum import and induced import. So minus 10 minus 0.05 Y. अभी आपको कैल Y minus 0.9 Y plus 0.05 Y. एक साथ बोल दो ना क्या वैल्यू आता है इसका. हाँ, नो Y का वैल्यू क्या आएगा? Y minus 0.9, हाँ, 0.15 Y. And here 60 plus 170 plus 180, 100 minus 10, so 90. So Y will be 90 divided by 0.15, so that will be 600 here again. Now foreign trade multiplier FTM, we know that will be 1 by 1 minus B plus M. So what is the value of B? 0.9. So FTM will be 1 by 1 minus 0.9, 0.9, and plus value of M, small m, you have to take 0.05. 0.05. So the value will be how much?
0.15. 1 divided by 0.15. 6.66.
6.3 is your FTM, foreign trade multiplier. That finishes the chapter. Clear? What happened? You came for chapter 3 only, no? Or chapter 2 also? I think chapter 7, no? All right. Now, chapter 7 for huh? 2 minutes. Okay, 5 minutes breather you can take. 5 minutes. Relax. That ITC broke the barrier today. 500 barrier. Rally on Monday.
Monday.
ITC broke the barrier. Now let's begin. Public finance. Now remember, this particular unit is introduction to the later unit that is going to come. All right. So in the first unit, we have, you must have covered that scarcity definition was given by Lionel Robbins. He said that there are three basic foundation of economics, that is scarcity of resources, unlimited wants relative to the scarcity of resources. I mean, scarcity of resources is there because there is, I mean, this is aggravated due to unlimited wants. It means scarcity is relative to the unlimited wants of the people. And he gave the law of scarcity. He says that human wants can never be completely satiated. When one demand is taken care of, another will take its place. And next is alternative uses of resources. Because if one resource can be used in multiple ways. A piece of land can be used to grow agricultural crop, or to set up a factory, or set up a school or institution or whatever. So how you are going to use the resources, that will determine how your economy is going to do. From these basic foundation comes the central questions in economics, that is related to allocation of resources. That is what to produce. That is whether to produce more mobile phones, or more educational institutions, or more potatoes, or more burgers, or whatever. And that is again related to allocation. How do you allocate the resources? How much to produce is important, because if demand is here and you're producing less, then there will be always lower growth in the economy, and cost push inflation will push up the price, wherein demand is higher than supply. So that is the problem. Next central problem or central question that they have to answer is, for whom to produce. If in an economy majority of the people are living a life of poverty, then consumption will not increase and economy will not grow. So you have to produce those goods. The economy must produce those goods in larger quantities that is needed by a large section of the population. And I don't mean, I mean, he never meant that economy should never produce those goods which are needed by lesser number of population. It's saying that more resources should be allocated to produce those goods that is needed by the larger segment of population. And then how to produce, whether to adopt capital intensive method of production or labor intensive method of production. In a capital surplus economy, you'll use capital intensive method of production to keep your cost of production down, and in a labor surplus economy, you'll use labor intensive methods of production, and otherwise it will lead to unemployment and will increase your cost of production as well, because in a labor surplus economy, which is a developing economy, cost of that capital is higher than the cost of labor. And of course, then what provisions to be made for future. So I told you, that if any economy grows at a very rapid rate, very rapid rate, that means that it's using more and more of its resources. These resources are not unlimited, so it means eventually in the long run you'll have lesser resources to meet the demands of the household and everybody. So as a result, the GDP growth will start to fall down. Now, Adam Smith, remember, he is considered as the father of modern economics. Many a time they'll ask you, father of modern economics, Adam Smith. He was a very vocal proponent of market-based economy, and he initially says that the government should not do any business, because government will always be taking irrational decision, politically motivated decision, rather than a rational economic decision. But then he realized that private sector will not put their hand into many businesses which is not going to give them profit. So in that case, government will have to participate. Otherwise, who will provide healthcare to the poor people? Who will provide defense? Who will maintain? Government influence is very important. So he also realized that. So he said that simply. Then we come to Richard Musgrave, but Adam Smith has said that there are two ways the market will achieve equilibrium. One is that the allocation in the private sector is done according to the demand and supply, but allocation in the government sector is done through fiscal policies adopted by the government, that is through the methods of government expenditure and government taxes. Wherein Richard Musgrave gave even more powerful theory. He divided the function of the government into three parts: That is, first is allocation function. So if you are running a business, you have to properly allocate resources. What is allocation? Allocation, simply put, is, let's say, allocation everybody does. You have scarce resources in terms of time. If you do not properly allocate resources, then you will have difficulty in taking the examination. Likewise, a businessman is running 10 different business, but every business doesn't have offer the same prospect in the short and the long run. So which business offers him more better prospect, he will allocate more resources to that particular business. And likewise, government will also allocate resources. Government will find out what is the rate of growth of in the primary, secondary and tertiary sector. If, let's say, primary sector is growing at 4% rate of growth, secondary sector is growing at 12%, tertiary sector is growing at 15%. Don't add up. This is the growth rate. Growth rate can even be 200%. All right. Then don't you think that, and when you know that more number of people are employed in the primary sector compared to tertiary and secondary sector, so which sector needs more help of the government? The primary sector. So government will use taxation policy, its expenditure policy, to allocate more resources towards the primary sector. Government will reduce the taxes in the primary sector. Agricultural income, for example, is exempt from taxes, and government can give, farm waiver package, subsidy on agriculture, inputs like fertilizer, pesticide and everything, subsidized electricity and so on and so forth. It means government is giving subsidy. It means to the seller, government is paying a part of the sum on behalf of the producer. Right. So this sector, and here relatively less allocation will be done. If suppose next year what happens, primary sector in that next 10 years, what will happen? Primary sector has started to grow at 10%, but secondary sector में 8% growth हो गया, tertiary sector में 7% पे growth आ गया. Then what will the government will do? Government will allocate more resources over these two sectors and relatively less resources over here. This is allocation. That's what we do in the budget. Government has a target that in 5 years time we will become a $5 trillion economy, 5 year plan. But to become a $5 trillion economy, you have to grow at 10%. Let's say if any of the year we grow at less than 10%, we'll have to find out which sector is responsible for dragging the growth rate below 10%, and government will in that budget influence that particular sector so that it can grow at a relatively higher rate than 10%, so that we can achieve the target. So we have long-term target, we have short-term target. This is done through allocation. But when you perform your allocation function, that country will grow, but that doesn't necessarily mean that country, after when it's growing, there will be equality in the economy as well. There could be inequality. If suppose government says that I will promote agriculture sector, I will promote secondary sector, infrastructure building and everything, who will benefit more from it? Do you think the promoters of the company will benefit more, or the employees and the common people who are not associated with that business, they will benefit? Of course, the promoters of the company. So it means what happened, the benefit of allocation of the resources has been cornered by very few individual, and there is inequality of income. Then the government will adopt what is known as redistribution. Sometimes distribution भी बोलते हैं, कभी redistribution भी बोलते हैं. Redistribution policy. So three policies है. पहला allocation, दूसरा redistribution. Now government will do what? Under redistribution policy, the objective of the government is to promote social justice, equality, fairness. So government will take from the top and distribute at the bottom. The government, the biggest tool for it is the most potent tool you can say is progressive taxation. But that's not only it, there are many things that the government can do. So government will say that you have benefited more from the the policies that are brought about, so it's your responsibility to pay more. So higher the income, the greater will be the rate of taxation. You will pay more, and this money will be taken and used for social welfare. Free education, free healthcare, subsidized housing policy, subsidized agriculture, subsidized pesticide and fertilizers for the farmers, and so on so on. Development of the farm sector, ये सब करेगा. And that is not, if that is not enough, then government will do some many more things. Inequality is also gender inequality. So gender empowerment government will also do. Government will find out which are the areas in the country which are backward. Government will allocate more packages, central packages for the development of the backward region. Government will find out from which community the people, less number of people are educated and employed. Then government will go for job reservation in government jobs for those people who are left out in the process of growth. You may have a different idea about reservation, but That is the reason why the government takes up reservation, and it will eventually become a political tool. But government will provide reservation as well. So government will also do many things. Let's say, for example, the tax rate on and essential goods and necessary government can reduce, and the tax on luxury products and high-end goods government can also increase. So these are the many things that the government can do to promote redistribution. And then comes stabilization. Stabilization function of the government is directed at two things. First, either it could be an expansionary fiscal policy or it could be a contractionary fiscal policy. We'll come to that later on. But what could lead to misallocation of resources? That is most important. They can ask you this question. Now remember, misallocation of resources means either there is overproduction or underproduction, overconsumption or underconsumption. Both are bad. Water is good for health, but you cannot consume 20 liters in a day. Food is good for health, but consume too much of food, you see what happens. So there should be balance in everything. Government will have to balance out everything. So too much of anything is bad, so it will lead to misallocation of resources. So you see here, Richard Musgrave, he gave three functions, separated functions of government into three parts. Direct question they can ask you from here as well. Resource allocation, that is efficiency, income redistribution, and macroeconomic stabilization. Now resource allocation in the private sector is characterized by market supply and demand and price mechanism determined by the consumer sovereignty and producer's profit. It means simple. Dekho, in the private sector, if the demand for anything increases, supply will increase. Business will think for opportunity. Even the demand for useless items is increasing, the production will happen. You see, who the hell purchases purified air cans? On Amazon, purified air cans are also sold. You can breathe, not oxygen, air cans. You can with a mask breathe कर सकता है, 500 रुपए में मिलता है. All right, demand is that. See, simple. If there is something is sold, then there has to be demand. All right, even worthless things can be sold in the market. Auction में क्या होता है रे? क्या एक पेंटिंग, what is the bloody cost? 10 million dollars में बिक रहा है. 10 million dollars. Somebody bought टीपू सुल्तान sword 50 करोड़ का, अब क्या करेगा? Alright, अब क्या करेगा? So if there is demand, there will be supply. There will always be supply. So you see, while private good, the state's allocation on the other hand is accomplished through revenue and expenditure activities of the government and budgeting, that is nothing but due to with the help of fiscal policy. Private goods will be sufficiently produced by the market, whereas public goods will not be produced in sufficient quantities. Why? We'll see. Due to the free rider problem, there are many other reasons. Now, why? Reasons which hinders efficient allocation of resources which may lead to market failure. First, imperfect competition. Monopoly is bad, especially in the private sector. All right. If suppose tomorrow Airtel shuts down, Vodafone Idea shuts down, MTNL to chhod do. So, do you think Mukesh Ambani will be paying you, I mean, charging you same money? Now you'll say, if I had one more son, I would have done 10 times pre-marriage. क्या होता है? Pre-wedding ceremony. क्या है रे? But पैसा है, खर्च करो, no problem. Your money, you have earned it, no problem. You can. But clear. अभी when now I'm waiting for. अभी क्या होगा? कि now his grandson is supposed to be born. So post-wedding भी है क्या? Are you serious? It has happened. कब है? Post-wedding also. Pre-wedding, post-wedding. I'm just wondering, what if somebody is going to die? Divorce, pre-divorce, post-divorce. Pre-divorce, divorce, and then post-divorce. All right. Everything is what is sell. See, this thing is, remember, this thing has demand in the market. People are watching it. People are not liking it, watching it. How many times when you are swiping up through the Instagram, you've seen it and you have just swiped it. आप देखेगा ना, आप 1 मिनट में देख लिया, खत्म हो गया, काम हो गया उसका. Alright. Yeah. So imperfect competition will lead to what? First, monopoly is bad. Why? Underproduction, unemployment rises, GDP falls. Higher price, then consumer surplus will be lower. Consumer exploitation will happen. So that is bad. So that misallocation can happen due to monopoly. Second, market fails to provide public good which are by their very nature consumed by common people. You see, if you want to buy private good, anything that you want to buy from the market, if you have money, you can get it, isn't it? But you'll never hear that is lack of mobile phones. Like even if some model is out of stock, you go to the other shop, you'll get it, or after 10 days, after 2 days, you will get it. But you will always find there is a lack of good infrastructure. There are lack of public stadiums, there are lack of public parks, public convenience, public toilets, public libraries, public swimming pool. Ye nahi hota zyada. So there is always a lack of it because the entire burden falls upon the government, and private sector do not want to participate because there is not much profit incentive into it. And that is again due to free riders. We'll see later on. Then comes externalities. Now, what is externalities? Externalities we'll study in detail. Externalities is when my action as a producer or as a consumer, any, will impose some burden over others who is not directly related to me. So that is externality. So if I'm producing a cigarette, if ITC is producing a cigarette, it will only take into consideration its cost of production, all the direct and indirect cost. But don't you think when this cigarette is produced, first of all, resources are misallocated. The land where you are growing tobacco could have been used to tobacco leaves, could have been used to produce something better. The labor that has gone into growing tobacco could have been used to produce something better. You are using transportation services and everything. And moreover, when these goods are consumed, it will lead to health hazard, not only to the people who are consuming it, but to the people who are not consuming it due to passive smoking. So it means there is a social cost of producing and smoking a cigarette. Consumption and production में social cost है. Let's say the social cost is 20 rupees per cigarette. Let's say if you are able to calculate, let's say, then if ITC, do you think it will charge 20 rupees from you? So the cost to the society is 20 rupees, damage I'm causing because of producing cigarette. So this 20 rupees extra I'll take per cigarette, and this I will use it for social welfare. The answer is no. ITC or any business company is not, their objective is not social welfare. Their objective is not protection of environment. Their objective is to earn profit. As simple as that. So this externality, if it is not included in the cost of production, then the price of the commodity will be on the lower side. Consumption will happen on the higher side, and more damage will be done to the society. That is externalities. Factor immobility. Now, what is factor immobility? If I am producing, let's say, for example, if I want to produce coffee in Karnataka, there is factor mobility. Why? Because Karnataka is the biggest producer of coffee. I can easily get the labor with the expertise. I can get the machine which is used to make coffee. I can get a piece of land that, I can produce coffee very easily. All right, clear. Factor mobility. But if I want to produce software in Bihar, nothing wrong. What you are saying? Let's say, so is there a factor mobility? Or let's say if I want to produce sugarcane in Karnataka, some sugarcane are produced, but UP and Bihar are the biggest region where you grow sugarcane. Correct. So if suppose in the country, entire country, there is factor immobility, it means the goods are taking a long time to raw material to come to my factory. The labor is not available adequately. There is no distribution network. So that will again lead to market failure. And that's why you see what is the reason that the government is constructing at a rapid pace more and more airports, rapid pace. You are constructing more and more platforms and railway tracks. New trains are launched and expressways are done at a rapid pace. What is the purpose? The purpose is not, that is secondary. You can travel, that is secondary. The purpose is to let the goods flow very easily. Distribution network setup करेगा, dedicated freight corridor करेगा. अभी मेरा फैक्ट्री कहीं भी मैं लगा, मेरे को पता है, I can get the raw material easily from any point in the country and I can distribute the goods toward the length and breadth of the country. So that is factor mobility. Incorrect or imperfect information. If you don't have the correct information, you will end up buying Tropicana juice considering that it is 100% juice. But this person is doing a great work now. I've been saying since long time how these juice are made, concentrate से बनता है. So but आप कहता है यहाँ जाके बूस्ट पीता है ना, you think that it's a health drink. You are consuming sugar. You are exploiting your liver. I'm not saying you should not consume once in a while, is all right. But every day you say, I'm a Complan boy, I'm a Horlicks boy, I'm a Boost boy. Oh, liver बोलेगा आप तो मैं हाई नहीं, मैं boy हाई नहीं, खत्म. So that is the problem. All right. Incorrect information, you will make a wrong choice. I always say fair and lovely will not make you fair. All right. How many of you use shampoos every day? All right. That is the worst thing to use in the world. Yes. So, but anyways, this अभी क्या होता है ना, advertisement से social cohesion. अभी क्या है, advertisement become on a kind of a scare thing. ये नहीं यूज करेगा वो हो जाएगा, ये खाएगा वो हो जाएगा, ये नहीं खाएगा वो हो जाएगा. वो बोलेगा मैं कैसे जिएगा, मैं क्या खाएगा. ऑलराइट, हवा खाएगा, बोले हवा भी पोल्यूटेड है. सो दैट्स के कैन ला है आपके लिए, इससे हवा लो. ऑलराइट. Inequalities and distribution of income and wealth. If there is too much of inequality, then consumption will be at the lower end, and you find that those countries will never grow. You'll see African continent is the richest continent in the world in terms of so many raw materials, but what has happened to them? They have not been able to exploit. Consumption rate is very low, and the lowest GDP rate you will find in sub-Saharan African countries. The allocation responsibility of the government involves suitable corrective action when private market fail to provide right and desirable combination of goods and services. As I've told you, fiscal policy is the tool to improve performance of the economy and increase its potential through expenditure and tax policy. Now, what influence, how the government can influence the production of these goods? So government may directly produce economic good. Yes, those sectors, if water distribution is not done by the private firms, government will do it. All right. If less hospitals are there in the private sector, government hospital will come. If private educational institutions are not reducing the fees, so common people, I mean, people belong to the lower rung of the society, economic society strata, they are not able to get their kids educated, then government will open more and more schools, and government is doing it. Government may influence private allocation through incentive and disincentives. So incentives and disincentives, government will say tobacco grow karega, tax rate 28% plus cess. Incentive, you are running a school, no problem, subsidized land you will be given. You're buying a diesel car, disincentive, green tax you have to pay. Apart from GST, in India it's not there, but many countries like Australia, they are going for green tax. Government say you are producing EV, okay, less pollution. Government is wrong, it's more pollution, but government will say that okay, I'm going to give you subsidy. All right. Solar panel, if you buy in Karnataka or anywhere in India, 30% is 30, I think more than 30%. 30% is given by the government as subsidy. So businesses are incentivized to produce more, because now business will think that I can offer this product at a 30% discount to the consumer. So my demand, the demand for my product will increase. One student asked me, sir, what if they don't provide discount? Why will they not provide? Because if others are providing discount and government is provided subsidy, then the first, the government will catch you, and second, this is known as profiteering, and second, then your consumers will go to some other competitor who is giving the benefit of subsidy back to you. All right. Government can influence allocation through its competition policy, merger policy. It means government, if suppose two companies are merging and it may end up creating a monopoly, then the government through CCI say that no objection certificate will not be given. This kind of merger is not allowed. Government's regulatory activities. Now, what is regulatory? You see, to open a bank, I need license. To set up a factory to produce tobacco and liquor, I need a license. By decreasing the number of licenses issued, imposing additional control, आप यहाँ नहीं बेच सकता, उस बच्चे को नहीं बेच सकता, कॉलेज के साइड नहीं बेच सकता, public places में smoking is not allowed. These things government can control the production and consumption of the good, and government sets legal and administrative frameworks as well. We have so many things. So then comes what is known as redistribution function. I have already told you that is related to promotion of equality in the economy. So distribution is concerned with the adjustment of distribution of income wealth so that to ensure distributive justice, namely equity and fairness. What the government can do? Taxation policies of the government, whereby progressive taxation on the rich combined with provision for subsidy to poor. All right. All the things that I've told you. All right. Proceeds from progressive taxes can be used for financing public services for low that benefit low income household. Example, supply of essential food. All right. Then employment and reservation, regulation and manufacture sale of certain products to ensure health and well-being of consumers. You see, government regulates the, why Bihar government banned the sale of liquor? Government was not worried about the higher income people who are consuming whiskey. No, the government was worried about by the labor class who are using country money, their hard-earned income every day to buy country liquor, and it was destroying the family. Government banned it. बिहार में ban है liquor. All right. Special scheme for backward region development of vulnerable section of population and so on. All right. Stabilization. Now remember, Keynes mentioned that stabilization will not happen automatically. Government will have to take the initiative. Full employment, sometimes it may be created, but not always. So when the economy is going to recession, government will have to adopt some fiscal policy. Now here, monetary policy is directed towards controlling the interest rate and the money supply. But fiscal policy is related, it has overall very wider objective. So here when we talk about stabilization function of the government, it will be divided into two parts. Either it could be expansionary fiscal policy or contractionary fiscal policy. Now expansionary fiscal policy is adopted when the economy is going into recession, GDP is falling down, so government will have to expand the economy. So in order to expand the economy, government will have to follow what is known as deficit budget. It means government will increase the value of G and decrease the value of T. So income of the household in the hands of the household will increase. That will lead to rightward shift in the aggregate demand curve, and then the recessionary gap or depressionary gap will be curtailed. So the purpose of expansionary fiscal policy is to promote GDP growth, and of course it will be adopted when there is economic recession. पूरा चार्ट आप लोग को दिया हुआ है पहले. So it will be adopted when there is economic recession. But we'll say, sir, what is the meaning of contractionary? Why the government wants to contract? Contraction means that, do you think the government will reduce the GDP of the country? No. Government intention is not to reduce GDP. When the government follows expansionary fiscal policy and GDP is rising, inflation also rises. Till the time inflation rises at a slower rate than the rate of increase in the GDP. Let's say GDP is increasing at a growth rate of 7%. Inflation is rising at 1.52%, no problem. But what if GDP is rising at 7% and inflation has gone up to 8-9%? Then in real terms, your economy is not growing. So the contractionary policy is adopted when by the government to bring down the level of inflation. When you bring down the level of inflation, as a side effect, that some amount of growth will also come down. It is just like doctor is giving you medicine that will cure a bigger disease, but you will have some of the side effect. And if you say to the doctor साहब ऐसा दवाई दो किसी का side effect दुनिया में नहीं है, ऐसा कोई exist नहीं करता. There is no medicine in the world that doesn't have a side effect. Even COVID vaccine we are seeing now, there is some amount of side effect, not on everybody, but very small group of people who are dying of heart attack. All right, clear? So now contractionary fiscal policy is adopted when to reduce the rate of inflation. So here the government will surplus budget, government will adopt. It means government will reduce its G and increase the T. Because what happens here, when there is inflation, it is because that the demand curve has shifted towards the right significantly. As a result, the price level has increased. This demand cannot be met by producing more in the short run, because in the long run you can, but in the short run you cannot. So as a result, what will happen? There will be hyperinflationary situation. So you have to shift the aggregate demand curve towards the left again. All right. So as a result, what will happen? The price level here will fall down. All right. Contractionary fiscal policy when you adopt. Of course, GDP will also fall down. So government will always perform a cost and benefit analysis, and it finds out that if the benefit is more than the cost, if I'm able to reduce the inflation by 8% and GDP falls down by 3%, then I should go ahead with it. But if the government finds out this policy will lead to fall in inflation by a small margin, but the growth will fall by a significant margin, no, search for another option. So every time government should perform, otherwise what will lead to? It will lead to failure of the fiscal policy. Fiscal policy will end up creating new problems rather than solving the existing ones. So everything is mentioned here, is simply an introduction is there. So stabilization, Keynes proposed that a market economy does not automatically generate full employment and price stability, and therefore government should pursue deliberate stabilization. It is related to what? Labor employment and capital utilization, overall output and income, general price level, balance of international payment, and rate of economic growth. By balance of international payment, it means government is trying to promote the export and government is trying to decrease the import. We'll see later on how this things works out. So you see here, everything that I've mentioned is mentioned over here. Government stabilization intervention may be through monetary policy. गलत है, government monetary policy नहीं करता, RBI करता monetary policy, and fiscal policy. Maybe through fiscal policy. Monetary policy has a single objective of controlling the size of the money supply, which is initiated by the central bank. Fiscal policy, monetary policy हम next chapter में पढ़ेंगे. Fiscal policy stabilization purpose attempts to direct the actions of the individual and organization by means of expenditure and taxation. It means budget. Government expenditure injects more money into the economy and stimulates demand. Tax reduces the income of the people and therefore reduce effective demand. Expansionary fiscal policy is adopted to alleviate recession, and contractionary fiscal policy is adopted to control high inflation. Budget deficit stimulate economic activity, whereas surplus budget slow down economic activity. How to design its budgetary policy so that pursuit of one goal does not jeopardize another is a big challenge for the government. And government functioning may have several imperfections which will have adverse effect upon the economy. Clear hai? We will end it today here. So tomorrow we'll finish off this. Everything we'll try to finish off tomorrow. All right? Clear? So same time, 10 o'clock, we are going to meet. Bye-bye. Right. Bye, everyone.